Morning, 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 and welcome to everyone. Wonderful to have you all here. You should be seeing me live. Perfect. And who's excited for today? So today is the second most important day in terms of this whole process, and I'm really looking forward to taking you through it. So today is all about managing risk, and it's also about partners. And this is a pretty important process if you think about it, because as Warren Buffett says, the single most important thing when it comes to investing is to not lose money, and that's rule number one. And rule number two is refer to rule number one. So, and from my experience, having done this a lot, it's actually comes down to the quality of your partners. Your partners are going to determine how you manage your risk. So let me know how you're all doing. How's the energy in the room? Are you excited? So I want to share with you a video, and this is a video that we created back in 2015. And it talks about the entire ecosystem and what we put together and how it all works. And it's really important that you understand how this ecosystem comes together, because we're going to teach you a lot today about how to get results. We're going to teach you about how to manage risk. And we're also going to teach you how to find the right partners. I'm going to share with you today, more than I do on any other day, a lot of the mistakes that I've made, because by sharing my mistakes, I get to share my lessons that I've learned and what we've put in place. And I told you yesterday about principles with Ray Dalio, what we've put in place in terms of frameworks and principles and rules to make sure that we don't repeat those mistakes. And so that's really kind of where we're at. But I want to start with this video, because this video will give you and let you know about what we do, how we do it, and more importantly, why we do it in terms of the overall process. So let me get this video live for you. And here it is here. And you'll see how it all comes together. And while you're watching this, just think to yourself, right, I want to be a global citizen. I want to protect my wealth. I want a plan B. I want peace of mind. I want to diversify. I want to be able to earn passive income in dollars, pounds, euros. This is the technology and the tool that we've built, the platform to enable you to do that. And think of Uber and my analogy of how it helps you be like the top 1%. Well, this is exactly how you can do it. So enjoy.
We'd like to introduce you to a revolution unlike any other throughout the history of mankind. This is a wealth revolution, and it's going global. Did you ever think that you'd be able to benefit from the only real, time-honored investment mankind has ever known? Real estate. Real estate investing has only ever been accessible to a small percentage of the world's population. This is no longer the case. The wealth revolution means that wherever you are on your wealth journey, be it taking your first steps or taking off globally, you can join our global community, a community of real estate investors just like you. The Global Wealth Group is experiencing exponential growth, and wealth has never been this accessible. A truly global wealth revolution. We dream big, and our dream is to impact the lives of 1 billion people. 1 billion people. How will we do this? Through groundbreaking digital platforms that allow investors like you to take part in exciting real estate investment opportunities. These opportunities are waiting for you everywhere, anywhere, worldwide. Now you can invest in real estate with any amount of money, from the comfort of your couch or your internet device. Introducing our global brand ecosystem. Wealth Create, Wealth Migrate, Wealth University, The Wealth Movement. WealthCreate.com is a platform for those taking their first steps on the wealth journey. The new investors who earn whilst they learn using real or virtual currency. Imagine this. Now anyone can own part of a hospital, a share in their local shopping mall, co-invest in a new and exciting development, or even earn quarterly returns from residential and commercial tenants. They, you, can now stand alongside multi-millionaire investors and earn the same relative amounts. WealthMigrate.com is a platform for those investors who are already soaring, as well as those who seek to join them. You can now own and manage a global portfolio of commercial real estate and do it all online. You'll benefit from the capital growth of your investments and get paid quarterly dividends in first world currencies, whether they be from commercial tenants or the funding of developments. The global dashboard shows all available opportunities, potential investment pledges, upcoming deals, and most importantly, allows you to manage your global diversified portfolio in one place. Passports and visas also become easier to obtain, as well as tax-efficient structures that allow global flexibility. Create the freedom you desire for you and your family. Wealthuniversity.org is a video-based e-learning platform for those who want their wealth knowledge to take off. Our research shows that the wealth mindset is the single most important aspect of creating and sustaining wealth. Test your wealth IQ and challenge friends and family to find out theirs. Acquire the thinking, secrets, habits, and proven success strategies used by the world's wealthiest investors, as well as that of our global community, who aren't just talking about it, but are actually creating it. Graduate and change your destiny and your future. Wealthmovement.com is the global gathering of our fans and followers in conferences hosted in local cities around the world, inspiring minds to help each other create more sustainable global wealth. The goal? To build a wealthier world together, and together to help reduce the wealth gap between the haves and the have-nots. Gain the latest up-to-the-minute knowledge of technology forecasts, internet finance, exponential thinking, collaborative smart investing, co-creation, apps and platforms, global wealth forecasts, cryptocurrencies, and new and exciting investment opportunities. This is your chance to meet your global wealth partners, co-investors, and friends, to be inspired by the world's wealthiest individuals, and to learn to think how they do. We are pioneering a global wealth revolution. Join us. Let's change the world.
So, what did you think? Give me some feedback on what you thought about that video. And let's get straight into day 4. We made that video 10 years ago, and I talk a lot about, living your dreams. And my father taught me many years ago when I was a young man. He said, son, dream big. People become what they dream. Well, that was a video we launched in 2015, and it was our dream, and we've spent well over $20 million in building that dream. But the good news for all of you is it's built. So everything that I'm teaching you today, the team's teaching you, working together as a team to help you and deliver, it's all built. Everything that you saw there exists, and you too can now participate in it. So that why I get so excited when I do these challenges is it's no longer about teaching people, because in the old days you would teach people, but then they couldn't take action. Like if I taught you everything I'm teaching you over these 5 days, and I said, yeah, I'll go and invest in commercial property in America. Like you couldn't participate unless you had $1 million plus. And even $1 million, no one cares. Even $10 million, no one cares. But now, everything that I'm sharing with you, you truly can implement yourself in terms of that perspective. So let's get into day 4. And this is all about risk management, and it's about mastering investment diversification. So a couple of things to get you in the room again. I remind you that today is about managing investment risk. It's about understanding investment risk. It's how diversification reduces risk, and it's exploring management techniques. Again, your tips for success, the bottom line is the dabblers are gone. The stressors are still stressing. But my strong recommendation is be present, be fully committed, take notes. Don't be distracted and on emails and WhatsApps and whatever else. Set your goals, take action, have fun. Standard thing every single day. I say the same thing. You've got the resources guide. As always, you've got this amazing resources guide that Shane keeps putting up. And if you wouldn't mind just tucking in the chat box for everyone, and you can literally go along, thank you, Kelly, to the resources guide, and literally everything's here. So you can go in, you can see that you've got day 1, day 2, day 3. So you can literally go through to day 3, and you've got everything with regards to day 3 in terms of the process here and everything else. Kelly, if you wouldn't mind just letting Shane know, I don't see the recording there. The recording's normally there. So we just need to add the recording. And then now we go to day 4 in terms of this, etc. So, but you've got all the links to everything in terms of, for some reason, the recording's not here. It normally is. Okay, so if you can just let Shane know that, I'd appreciate it. Okay, you should by now know that you've got the WhatsApp group and you've also got the school group. I can't reiterate over and over enough that you should be in the school group by now. It's free. There's no reason why you shouldn't be there. And in the school group, you've got the community. You can literally go in and see what people have been saying, what's their homework, their takeaways, etc. So always interesting to see what people's takeaways are. So well done to all the people that are participating. You know, you can go to the classroom and, you know, here you've got all the success stories. I always joke with people, get yourself a cup of coffee, put a bit of time, and you'll be able to literally go and see all the different success stories. You can go to Start Here, which, you know, again, I've done this in 178 countries for 28 years, and you can literally go through. There's 7 lessons that you need to know that every investor and this is the psychology of setting you up for success. And then you've got the investor roadmap, where my partner Alex is literally taking you through literally 5 short videos on how to basically get set up on the platform. It's free, and my opinion is no one has any excuses. Okay, so that's that. If you want to join us for the VIP, just by the way, in the VIP yesterday, we went through portfolio analysis. So we literally went into the details. So again, the VIPs are the ones where I try and add the most value. So if you go through, and we went through this document, which I basically created on the back of the mastermind. So our mastermind members were asking me to do this, and so we did it. And we basically took this, how to structure your portfolio, and we went through and we did an entire conversation around all the different asset classes. Oh, what just happened there? All the different asset classes, what should you be investing in, what percentage per age group. And we had a whole conversation and analysis around that. That's the benefit of VIP. Not only do you get the recordings, you get the workbook and everything in between, but what's important is you actually get the conversations. I find the conversations the most valuable, because it's actually where you get to synthesize stuff and talk about it. It's not too late. You can still join the VIP if you want. You'll get the recordings from the last couple of days, and you'll get the challenge workbook, which is something I'm very proud of. We've only just put it together for this challenge, basically. Right. What is our focus? To build globally diversified passive income and portfolio growth. How do we do it? To diversify across countries, currencies, assets, partners, and time. And then what do we do? Well, any great task is basically, you know, literally you break it down into your long-term goal, your midterm planning, and your daily activities. And Shane's saying the recording is there. So yeah, we had a slight glitch in technology, but anyway, it's there now. So thank you very much, Shane. Appreciate it. Okay, your action steps for yesterday. We research and identify 3 different investment strategies: passive investing, active investing, and value investing. Complete a hypothetical diversified investment portfolio with different asset classes and allocating percentages to various asset classes. As an example, I've literally done that for the people that are in the VIP and the wealth hackers. So like, that's exactly what this is in terms of that process. But again, in this challenge, and one of the reasons we make it free, is that everyone has access to this information. We've given you access to it. Those that pay now can choose that, actually, hang on, I don't want to have to do this all myself. Like, if I want to join Scott and I want to join the wealth hackers, then I can get access to this documentation. I can go and look at what's best practice in the world, and I can copy it. Or actually, I want to join the mastermind, and that's where they're literally going to hold my hand, and I'm going to have a personal one-to-one bespoke meeting with Scott. I'm going to meet with the family office, and they are going to help me design my asset allocations. You get to choose. You can do it yourself. It's free. You can join the wealth hackers and have it done in a like-minded community, or you can literally have it done for you, and someone holds your hand and does it personally for you. You can choose whatever suits you in terms of that process. And as always, share one key takeaway in the Wealth University group. I thought, and I'd love to know from the other VIPs and wealth hackers, and just remember, when you do share, you need to share it with everyone, not just hosts and panelists. But what was your takeaway from yesterday? I loved the conversation. We had a fierce conversation around the financial industry. Why are we not taught this stuff? Why are our investments that we're being told by the traditional financial industry different from what the top 1% are doing? You know, what's so interesting is that when you look at this, and you look at what most people are investing in, and you look at their results, and then you look at you know, the reality of what the top 1% are investing in and how opposite they are, it really makes no sense. But yeah, I'd love those that were in the VIP room yesterday. I'd love to know your thoughts as to whether you enjoyed the conversation. Okay, just type in the chat box for me. I'm always fascinated to see what people's takeaways were. And then for gold, you can research the different asset classes and their historical performance, and you can research and compare the different investment vehicles. And for me personally, you guys there? I'm not getting any response. Is anyone in the chat room? Are you live? Am I on my own? Can you hear me? Are you seeing me? Am I just talking to my camera, me and myself? Okay. Just wondering why no one's responding to me in terms of their takeaways from the VIP room yesterday. Okay. So for me, again, by the time we're getting to day 3, I'm showing you what you can do under silver and gold. I'm showing you what you can do, or you could literally copy. And hopefully you learn from day 1. The path to mastery is about modeling. It's about copying. It's about partnering, because it's so much easier to get there safely and simply in terms of that process. And, again, but if you want to do it all yourself, like I did for 14 years, and you want to go the difficult route, quite frankly, in my opinion, the dangerous route as well, then this is, I'm telling you what to do if you want to do it yourself. Okay. You can book a call. So if you want to jump on a call, I think the calls are opened up from today. And the reason being is that you've now got enough understanding of who we are and what we do, so that you can ask the right questions and we can set you up for success. And my team can actually help you through the process. So I remind you of what we went through yesterday. You've got 2 options. Most people in life don't get what they want. They don't get results because they use one of these 3 excuses. They don't have the time, they don't have the knowledge, or they don't have the money. So that's basically one of the 3 excuses. What we tend to find is that people that get results, people that are successful, well, I'm sorry, just before I go to successful people, so they kind of got their head stuck in a laptop. At the end of the year, they're frustrated. It's another year's gone by, anxiety, and year after year, nothing changes. The wishes and the dreams stay the same, but the results don't. And what's so interesting is that the people that do get results, they get what they want. I mean, just to tell you a personal story, I got invited by Robert Kiyosaki to go on a investor summit in America on a boat at the end of June. And it was so interesting because I've been toying as to whether I should go or not. And just yesterday, by me teaching you, it like really sort of sunk in for me, because it's going to be expensive to fly there and everything. But when Robert Kiyosaki personally invites you to be there, like that's quite a big thing. And I literally sat there yesterday teaching all of you, and this is the benefit of teaching someone else. And I was like, Scott, what the hell are you doing? Like, why are you even debating this? Like, get what you want. Like, you need to be there, because like, find a way to make it happen. Because when you find a way, like I told you with Tony Robbins and Richard Branson and Roger Hamilton, all 3 massive life experiences for me, when I found a way to get what I want, that's when stuff moves dramatically. And now you have to invest in yourself. Like, I'm going to invest about $10,000 to go and spend a week with Robert Kiyosaki and some other incredible investors from around the world. And it's a lot of money. I get it. And that's why I'm sort of toying. Should I, shouldn't I? It's a busy time of the year, blah, 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 blah. And it's like, Scott, you're literally teaching people what to do, and you need to listen to your own stuff. Get what you want. The second is get the knowledge. Now, you can go get all the knowledge yourself, or you can get it through a partnership. And the third, get the time that you want. Again, I used the example of Roger Hamilton, where, again, we work with generally successful business owners, entrepreneurs, corporate execs, and time is their least asset. I'm the same. Like, one of the reasons I'm not thinking of not going to America is like, I don't have the time to go there for 10 days. And then you think to yourself, can you afford not to? Like, if this is something important to you in the next 10 years, can you afford not to invest the time? And that's why we got this family, because at the end of the year, they're happy. They've got a plan B. They've got peace of mind. They've got diversification. They've got wealth protection, and their portfolio has been optimized. And they've got a plan in place. They've got legacy. They're thinking about generational wealth and implementing it across the generations. So we gave you options. Just yesterday, we spoke about the passive income challenge, where Alex will literally take you through the process over 4 weeks. It's no more than 1 hour per week. And within 30 days, you're starting to earn a passive income in terms of that process. Then in terms of the coaching, that's what the Wealth Hackers is all about. So Alex will literally sit with you. every single week for 4 weeks, and he'll literally take you through the process. And by the way, the best part about being part of the Wealth Hackers, it doesn't end after 4 weeks. You know, if you sign up for the annual subscription, you get access to him every single Wednesday. You get access to me every single Friday. And the best part about that is that the coaching and the hand-holding we're receiving are actually priceless. This is what Frankie said. I did the 30-day challenge. I started investing and it was worth it. Passive income challenge changed my life and has put me on a wealthy mindset. And they're just a few that I've literally screenshotted through the time. You know, one of the things that I love most is we're community. And we built this company from community. In 2004, this was me on stage in London in a place called Putney. We had multiple events in London, you know, all through live events, teaching people and then helping them invest. You know, then we did buyers trips to England, America, Australia. You know, we've done wealth weekends where we take people away for the weekend with like-minded investors. We did one in March last year in Stellenbosch. We did one in the Cradle of Humankind, which was an incredible event at the end of last year. We did a buyers trip in London. The weather was bloody terrible, and it reminded me why I don't live in England. And sorry to anyone that's in England, but it reminded me why I don't live there. And we did an equally beautiful wealth weekend in Knysna in March. Our next one, by the way, is coming up in September. So if you want to come and join us and be around like-minded people and spend time with our family office, then I'd strongly recommend that you start to plan to be there between the 10th to the 14th of September. But you know, that's what our Wealth Hackers is all about. It's a digital community, and we basically copied Netflix. And our logic with Netflix was, rather than trying to sell one course here and one course there, put everything that we've got all in one place. So if you want the right information, you've got Wealth Going Global, and literally it's over $8,000 worth of value, but you can get it for $497. Now, I did tell you that if you sign up for Wealth Hackers this week, and you'll see that the price is a lot less than $497, you're going to get invited to be part of, every 2 years, I redo Wealth Going Global. Now, I'm going on this investor summit, and I'm going to learn from the best in the world, and I'm going to bring that back, and then I'm launching Wealth Going Global, the rerun, version 2, on the 22nd of July. If you sign up for Wealth Hackers this week, you're going to get it at the discounted price versus the new price when we launch it in July. Asset Class Mastery, it's nearly $15,000 worth of value. Literally, people have bought it for $1,997. You put it all together, just those 2 courses alone. So you've got access to the right information and the right partners. You put it all together, people have literally paid $2,500 to be able to get access to this. But because we wanted to follow the Netflix for wealth, we literally have thrown in Wealth Going Global, Asset Class Mastery, Clem Sunter Q&A, the 6 pillars to wealth, the Enneagram and wealth, how to teach your children money, generational wealth, effective tax structuring and estate duty planning when building a globally diversified portfolio, the entire wealth weekend workshops, which is the 6 mega trends, the Enneagram and generational wealth, and then exclusive access to the community. If you put that all together, it's worth over $60,000 of value. And I just want to point out that the things in blue, because you can pay for it monthly if you want, but only if you pay for it annually. If you pay for it annually, you get all the stuff in blue, including being part of me live when I redo Wealth Going Global in July. Okay. Zig Ziglar said, you can have anything you want in life if you help enough other people get what they want. And so with Wealth Hackers, that's why we've made it an absolute no-brainer. You know, if you do the maths, okay, and where other people, just for Wealth Going Global and Asset Class Mastery, have paid $2,500, and if you pay $356 per year, okay, and you divide that, okay, it's going to take you about 7 or 8 years just to get the value. So we've basically made it an absolute financial no-brainer. And then people say to us, why don't we just give it to you for free? Because when people pay, they pay attention. And we want like-minded. This community of Wealth Hackers is something I'm very proud of. And it's something that we want like-minded people who are committed to their journey, who do show up and who want to get results. So just to remind you, everything you get, the ongoing courses and the trainings, and we're consistently adding to that library, the ongoing Q&As. So every Wednesday, Alex is live. Every Friday, I am live. Alex does accountability. And the platform on a Wednesday, I do strategy, deals, investment on a Friday. Access to the events, like all the VIPs, the Wealth Hackers get access to, the community-based learning. We are going to bring competitions back into the fore. If you do the annual amount, you get a 20% discount, and the price is $356. And you can literally go to the link, diversificationchallenge.com/wealth hackers. If you go to that link, that's where you get all of the value that we've said. And if that's not good enough, if that doesn't make sense to you, the system actually that Shane has put in place is you can actually even trial it for free for 7 days. So go and check it out. We know it adds so much value, so we'll give it to you for free for 7 days. Go try it. And after 7 days, you'll be billed. If you want to, if you're not, you just cancel it. But we know, I mean, we know the value's there in terms of that process. And again, if you want to go and check out what all the clients have got to say about it in terms of that process. And then finally, some people say, no, but Scott, I don't really want to do digital learning and I don't want to go do more courses. I'm too busy. Fine. You want bespoke one-to-one. Well, that's the mastermind. This is about getting results safely and simply. It's an enhanced partnership between our family office and ourselves. And like I said to you, there's 9 steps to generational wealth. This is what they do with their wealthiest families. They literally take them on the journey for the 9 steps. We take you on the exact same journey. We literally follow the steps step by step. It's a collaboration between ourselves and our family office. And we've democratized access to a family office. You get to work with me. I help you. And my team gives you, basically exclusive access, and you get to work with the family office. And it's all one-to-one and bespoke, which is so important. So you get access to the learning platform, which I did tell you yesterday, I did show you. So there's an exclusive platform just for the mastermind members. And you literally have the learning platform where you can go through all of the 9 steps, and you get access to a exclusive Private Wealth Global, which is our investment platform. And that's where there's a 50% discount on the fees, etc., in terms of that process. And again, if someone does join the mastermind, I always say they're at the top of the tree. So you automatically get access to the wealth hackers, you get access to the immigration agents, you get access to the wealth weekends, and first access to the buyers trips, etc., etc. So if you want to join the mastermind, literally as of today, Alex and the team will be taking meetings. It is a first come, first serve. So I'd strongly recommend. I know Ruth was asking in the VIP room yesterday. Someone else was asking in the WhatsApp group. The best way to get your questions answered is to book a meeting and have a call with one of our team members. And then we can understand what it is you're trying to achieve, and we can make sure that we're helping you do the right thing for you and where you're at. Okay, and some people like pictures. I like pictures. So this is how it all works. We've got the passive income challenge, which is basically we get you started. Like you literally get on the platform and you earn a passive income. Whether it's $1, $10, $1,000, doesn't make any difference. It's about getting you started and starting to earn a globally diversified passive income. We've got Wealth Going Global, which is our course to teach you how to get the right information. We've got Asset Mastery, which is our course to teach you how to get the right partners. And then we've got our family office, which literally is where it's the first class, it's the top of the mountain, and it's where we work together with our family office. You can go check out any of those links. You can basically see this is what we call our aspirational ladder. And if you want to join the Wealth Hackers, well, the bottom line is the Wealth Hackers' intention is to help you climb this ladder. Okay, so maybe you want to take a screenshot of this. I'm going to have a quick sip of water. And basically what this is helping you do is this is what we offer. If you want to know everything that we do, you can do all the stuff for free. We've shown you how to do that. And if you want to climb our aspirational ladder, this is how we can help you get to the top of the mountain. And Jacqueline, I just saw your comment that the weather is terrible in the UK. I'm sorry for you. I'm in the middle of winter and the weather's magnificent here. It's a little bit overcast today, but yesterday was unbelievable. Okay, right. I'm not going to be giving you financial advice today. And today, more than ever, I'm going to be sharing with you my mistakes so that I can help teach you to avoid them. So let's go into risk management. This is the formula. And you can see here that we've covered countries, currencies, assets. Today, we're going into partners. I remind you that today, I'm going to try and share what's important to you. But if you want to go deep, there's an entire module in Wealth Going Global on partners. So what is partners all about? Well, the power of partnership, and this is actually helping you invest globally with confidence. We help investors to be confident in their ability to choose the right partners. Now, as part of partners and due diligence and in the resources, you'll actually see that we've got some documents. So some of the stuff that I'm going to explain today, how we select the right partners, et cetera, we've got cheat sheets. You can go and read the cheat sheets. They are literally in the resources. Shane has very kindly put them for you. Okay, ladies and gentlemen, what I'm about to share with you is probably one of the top 3 most important slides in the entire week. So this is that moment that you take out your pen and piece of paper or your cell phone and you get ready, because this one little slide has cost me tens of millions of dollars, personally and with other investors. And using the principles that I learned from Ray Dalio of laws, you can call them principles, you can call them rules, you can call them laws, you can call them whatever you like, frameworks. When you make mistakes in life, you should learn from those mistakes and you should put rules in place to make sure you don't repeat those mistakes. So I call these the 4 golden rules. If you're going to choose a partner that you're going to invest with, the first rule that we look for is that they've got a 10-year track record. The reason being is that economically, generally economic cycles go in 8 to 10-year cycles. Okay, so if you go like this, every 8 to 10 years, sometimes a bit longer, sometimes a bit shorter, but generally 8 to 10 years, you have economic cycles. And so what you want to look for is a partner that has succeeded not only in the good times, but equally in the bad times. Because one of the things I feel very strongly about is that your character should be determined not by how you behave when it's working, but how you behave when it's not working. And so it's easy when the market is rising to make money and to make your investors happy. But what do you do when the market turns against you? How do you then behave? And there's 2 sayings that I heard from a US dollar billionaire in the crash in 2009 that I love. The first one is that even a turkey can fly in a hurricane. So if you think about it, like in the 2000s, all around the world, people were making so much money in property. There was a low interest rate environment. And even a turkey can fly in a hurricane, which basically means an idiot can make money when the market's easy. The other one that I liked is he said, when the tide goes out, you see who's got their pants down. And so what's really interesting is that when the market goes down, you see who's got good deals and who's got bad deals. And so again, when you're dealing with a partner, you want to be dealing with someone that's got a 10-year plus track record, because you want to see how they behaved through the bad times. Now, do me a favor in the chat box and just type in the word understand, because I really want to make sure that you understand all 4 of these golden rules. So that's the first one. The second one is that they've got specific market knowledge. So very often in life, you'll meet people that would call themselves a jack of all trades. They'll, Scott, I do medical buildings, I do industrial buildings, I do data centers, I do a bit of crypto trading on the side. Oh, and by the way, I do gold and silver as well. Run away from those people. You want people that are niche focused. You'll notice when you do our asset class mastery, each and every one of those people generally have been doing what they're doing for 20 plus years. If you're talking industrial logistics like Judd, that's what he's done for 20 years. And he's done over $1 billion worth of deals in that sector. If you take Bruce Saunders, he's been doing medical office buildings and what's it called, multifamily for now since 1997. So what is that? Like literally nearly 30 years, like literally, and all just in Atlanta. Specific market knowledge. You take the data center guy, that's all he does is data centers. You take the crypto guy, all he does is crypto. You take the gold person, all they've done is gold and silver. That is what you want when it comes to specific market knowledge. Now, if you're going to diversify, and today we're going to go through this in more detail with one of my partners, Selwyn, who by the way, has a PhD from Cambridge. And if you're going to diversify, you cannot know everything about everywhere. Mark my words, if you have $100 million and you're watching me now, and you think that you're going to do it all on your own, and you're going to go and diversify into America, and then into England, and then into Europe, and then into Australia, and across multiple different asset classes, it's not going to work, and you are going to fail. Okay? You have to diversify. Can I just very quickly, what is going on here? Where the hell's my phone gone? Oh, I just need to answer this quickly. Oh, shit. Kelly, do me a favor. Please just phone Thiessen Gate. Someone's trying to get into the estate. Hello? Okay. Right. So specific market knowledge. So hopefully, again, like this makes sense. And again, if this makes sense to you, just type in there, understand, please, because I'm literally teaching you these 4 golden rules are how to make sure you don't lose money. Right. Number 3, put their money into the deal. Okay. This is the one that took me a while to learn. So when you do deals overseas, like you go across to England or America or Australia, and you basically are trying to put your money, and you're trying to do deals. So they see you coming. Like as an international investor, they see you coming. And what they like to do is they take all of your money to do the deal, and then they take 50% of the upside when there's a profit, which sounds wonderful until there's not a profit. And then you lose all your money and they have no money, so they just run away. It's very important that they put their own money into the deal. And then something I learned the hard way, because I had that rule. I didn't have the little brackets, by the way. I had the rule they got to put their own money into the deal, until we did a deal in Texas, in Austin, a family office building. And the gentleman who was doing the deal was putting in about, I can't remember exactly whether it was $250,000 or $500,000. So the total amount of equity was about $5 million. And he was putting in 250 to 500. I think it was 500. So I think he was putting in about 10% of the equity, which is not a huge amount of money in $5 million, but it was more than any of the other investors were putting in like themselves. So he had more money in the deal than any individual investor. So I was very comfortable until the shit hit the fan. And then I found out that when they finally started paying money back, he had what's called preference shares. And so his money got paid back before the investors. And that's where I learned, and that's why I have the little bracket thing on the same terms. Because in those days, I was naive. I didn't know that. I was like, well, he's got his money and I got my money and we're all good, until the shit hit the fan. And then I realized he had preference shares and the rest of us were just ordinary investors. And so it's very important that they're on the same terms. And then finally, one that I used to only have 3 golden rules, by the way, but something that I've learned in the last probably 7 years is that 80% of the equity needs to be coming from local investors. So if I look at all the big mistakes that I've made and or being part of, is where the money was coming generally from international investors. And what it makes it a much safer investment is when the money's coming from local investors. Now, let me explain myself. We're doing a deal in Manhattan at the moment where it's about a $14 million deal. And $6 million. Let's just go through each one of these things. So the 10-year track record, okay? By the way, I would strongly recommend that you screenshot this, take a picture, write down notes, put it on a wall, learn this, indoctrinate it, tattoo it on your arm, tattoo it on your forehead, do whatever you got to do. But I cannot explain to you how valuable these are. But let's just go back to the Manhattan deal. Okay, so the partners that have been doing this have been doing this for decades. So they got a huge amount of track record. They've been running funds for some of the wealthiest families in the world. The specific market knowledge is that they specialize in New York, in Manhattan, in taking old buildings and renovating them. Specific market knowledge. Putting their own money into the deal. It's a $14 million deal. That's what they needed originally. They're putting in $6 million. They were raising $8 million. Fine. And number 4, we put in $500,000. Our family office partner put in $1.5 million. So internationally, we put in about $2 million. And the other $6 million came from high family offices and institutional capital in America, local investors. So from local investors, you had $6 million from the developer. You had $6 million from local investors, institutional partners on the ground and family offices. So that's $12 million. And you only had $2 million coming from international investors. That's the type of deal I want to do all day long. Now, do me a favor and type in the chat box if you understand across all 4 of them. So understand 1, 2, 3, and 4, because this is so, so important. And I know, Connie, as an example, you said to me, you know, how do you find the right partners, etc. Hopefully this is really sinking home for you, because this is so important in terms of this overall process. Now, if you take our kind of due diligence process, a lot of people out there think that you go and look at property. I mean, I have this all the time. People come along to me and they say, hey, Scott, look at this deal. We want you to do this deal. And I'm like, we don't invest in property. We invest in partners. So if you look here in our due diligence process, everything always starts with the partner. We make a decision on the partner first, and then we go and make a decision. We do a due diligence on the deal. And then only is a decision made. And once that decision's made, the deal goes live on the platform. And then we raise equity, and then we close the deal, and then it gets structured, and then we implement the investment. And then when the deal pays out, quarterly or whatever, and then the deal gets tracked, we finally exit the deal, the capital gain is unlocked, you return the capital to investor, and then the funds are available for reinvestment. But the point I'm trying to show you here is it all starts with doing a due diligence on the partner. And the myth number 8 here is that, people say to me, oh, but Scott, I can do my own due diligence. Yeah, cool. And you should do your own due diligence. But again, my philosophy in life is, why would you do it all yourself? Why would you not already copy like what's in place in terms of that process? And again, if you take that Manhattan deal as an example, not only do we do our due diligence, but our family office is doing their due diligence. All of those institutional partners and family offices are doing their due diligence. The bank is doing its due diligence. And obviously the partner on the ground that's putting in the $6 million is doing their due diligence. There are like at least 5 layers of due diligence in terms of a deal. You're starting to see how important this becomes. So where did this all start for me? Well, I originally did some research in 2010, and I found that 80% of investors that invest overseas lose money. It's ridiculous, 80%. It was when I joined AIPP, which is the Association of International Property Professionals, which is out of England. And it was set up because there were so many dodgy people in the industry selling so much rubbish. And I actually decided to write the book. So that's where this book, Property Going Global, came from, because I decided to take Clem Santa's framework and to help investors to ask better decisions. So if you read this book, there's 16 different countries that I analyzed here. And I said, if you're investing in America, this is what you need to ask. If you're investing in England, this is what you need to ask. If you're investing in Australia, this is what you need to ask. Because I was basically trying to set up investors for success. And by the way, I'd be interested to know, I'm just going to turn off the heater here. Getting nice and hot in here. How many of you, just type in the chat box if you would like to get a copy of my book, Property Going Global. And some of you, I'm sure, have read it. I tend to joke the only person who has read it is my mother. But the point being is that the book's there. So don't, yes, please doesn't help. Please just put in property, what is it? Property, just write in there PGG, Property Going Global or something, so we know what to look for afterwards. Okay. So what we did is we evolved, the thing that I did with Clem Santa, and we turned it into GIDS, our Global Investment Due Diligence System. And this is where we basically go at a macro level. So we look across countries. I've already started to teach you how to do this. I did this on Tuesday, around how do you look at the different countries and where do you actually invest. And then I looked at the international currency and and we did that also on Tuesday. How do you look at the different currencies? Then you get down to cities. Should you be investing in Atlanta or should you be investing in Detroit? And then you finally get down to deals, like which deals should we be investing in? And then you look at your partners and do the due diligence in terms of like where are we at and what's happening with this. We look at the structure and how the deal's being structured. Then you do your pre-purchase due diligence. Then you maximize the investment. Then ultimately you have to have a place to be able to get your returns. And finally, it's all about the customer experience. So it's the 10 different layers. Now, if you do Wealth Going Global, I will take you through GIDS 1.0, which is residential. So this is the due diligence framework for residential, and GIDS 2.0, which is for commercial and alternative assets. And again, if you do Wealth Going Global, or if you join the Wealth Hackers, you can see here, if you go to the Wealth Hackers and all the mastermind, and you do Wealth Going Global, and you go down to partners, you've literally got access to all of our different due diligence, plus you got access to all my different models, GIDS 1.0, GIDS 2.0, the due diligence checklist. we've got a checklist that is about 130 odd line items that we've put together just when we're looking at deals to try and make sure, like, is this a good deal? Is this a bad deal? And the reason we do that is because we want to, from mistakes over past and like by working with different people, like what works, what doesn't work. So what this ultimately comes down to, and this is a framework that we didn't come up with ourselves. This is an international framework. And basically the way that the institutional partners look at if you're going to invest with a partner, they look at the different options. Basically, they basically say like, right, is this partner tenured? Okay, so the first one here, you can see at the top here is tenured, and their management experience is more than 50 years. Their company's been operating for more than 15 years, and they got more than $1 billion under management. Okay, so this is an international standard that you can use. Then you got established, which is 40 years. You can see the maths. Then you got developed, and then finally you got emerging. Okay, now you might still work with someone who's emerging because they got 20 years worth of experience, but they've only recently opened their own company. So this happens every now and again, where you get a group of people with a tremendous amount of experience, but their company hasn't been going very long. Okay, but it gives you an idea. So let me give you an example of some of the partners we've worked with just to teach you. So if you take Feldman Equities, they've got $100 million invested in terms of their family. They've got 4 million square feet under management. They've got 100 years worth of experience. They've been through 7 recessions, and they've got $3 billion under management. And, you know, we did this deal with them in December 2020, and I never in all my life thought I would invest in a bank tower like this. And it was a total return of 16% and a cash-on-cash return of 9.63% and a 5-year investment, so all in US dollars. Now, would you like these type of returns in US dollars? And would you like to invest with a partner that is tenured, that you know already has been through 7 recessions, has $3 billion under management, has over 100 years worth of experience? Is it starting to make sense? Okay, what about MAG? So MAG has $300 million under management, 43 properties. They've managed to get a return across all their projects of about 18% total return, and they've got a cash-on-cash return of 9%. You know, we've done a couple of projects with them. We've done this industrial building here in Ohio. It was a 12% return with an 8% cash-on-cash. You can see they're tenured. We did this one in Texas, which was actually a debt deal. So it was a 1-year deal, and it just paid an income of 10.5% for 1 year. So again, an industrial logistics building. You know, then there's another partner here, which is a structured note. So you got BNP Paribas, that's one of the biggest banks in the world. You got IDAD, that's done over 1,000 structured notes. And you can see that they've got a return of about 15%. So again, no capital growth, but purely an income return. But this is those structured notes that I spoke about on Tuesday. And then here's one that's an emerging sponsor. We've done 3 deals with them. And it's interesting because you can see DWG here. So Judd, I've given you the interview. It's in your resources with Judd. And you know, he's been in the industry for over 20 years. He's done over $1 billion in deals, but he started his own company, DWG. It would be actually now about 5 years ago, to be honest. And we've done 3 actually opportunities with him. Again, you can see an industrial opportunity here. It was a 17% total return and an 8% cash on cash. So hopefully you're getting an idea of these different types of opportunities. And, you know, myth number 9 is that people think that they can just go out and find these type of deals. And I always say to people, this deal that we did here, the day we bought this deal, there was $1 million in uplift in the deal. So we bought the deal $1 million below market value. So the banks valued it at $11 million, and we bought it at $10 million. And when I say we partnered with Judd and his team and all the other investors. Now people say, well, you know, Scott, I can go and do good deals. Can you? Judd's been in the market for 20 years. He specializes in sell and leasebacks. And he found out that there was a seller who was based in Canada that was selling this building. They didn't know the market value. They were needed to sell quite quickly. He was able to scramble, put the deal together, get the financing in place, secure the financing, which, by the way, as an international investor, is extremely difficult to get financing, fix the mortgage rates, and basically secure this deal. And the day we bought that property, there was $1 million in equity in that deal. Pretty cool, huh? I mean, just do me a favor in the chat box. Is this all starting to make sense? Or do these real stories, do they teach you the lessons that I'm trying to share with you? Okay, excellent. Okay, so if you want to do it all yourself, you can literally go, and this is all the stuff you need to do. Country due diligence, sponsor due diligence, lawyers, brokers, tax, tracking, onboarding, deals, lawyers, KYC, investor reporting, banks, client services, etc., etc. Or you can go to our platform, 4 simple steps. Sign up for free, set up an account, browse and invest, and earn an income. And maybe, Kelly, if you wouldn't mind, just chuck in the link again to the Wealth University. And I just remind everyone that this investor roadmap here is literally the 4 steps that we just spoke about. So you can do it all yourself, or you can literally take what has taken us more than 2 decades and over $20 million to bring it all together and to make it simple and safe for you. So how does it work? Well, you've basically got your bank account. You set up a wallet. So we work with Lemonway, which is the biggest digital wallet provider in Europe. And each and every one of you has your own digital wallet. It's your own bank account. You put your own money into it. So this might be Jill Soap, Jack, Bill, Sarah. It then goes on a platform like Wealth Migrate. You know, and the deal gets put there. Let's say the Manhattan deal, the investment opportunity. We then aggregate all the investors. So whether you invest $10 or $10 million, we aggregate all the investors together. It then goes through a tax-efficient vehicle. So we set it up with a SPV, a special purpose vehicle. It's a tax-efficient vehicle to make sure that your money is being invested in a tax-efficient way. And then you've got the deal ownership. So that SPV owns the deal 100%. When the returns get paid, they might be the income returns, they might be the capital growth. The money gets paid into a deal wallet. And then from the deal wallet, it gets paid straight into the investor wallets, depending on, you know, the proportion of how much you own. And then with your investor wallet, you can literally invest and do whatever you want with your money. You can go to Disney World, or you can reinvest in new deals. And that's it. In a nutshell. People ask me this all the time. How does it work? That's how it works. Now, I want to share with you my mistakes, because I think this is a very, very valuable part. And just by the way, when I wrote this book, chapter 13 also talks all about my mistakes. You know, what's interesting is that whenever you're successful, and I learned this from Richard Branson, whenever you're successful, people love to tear you down. So something I learned a while ago, and I don't remember where I learned it from, is rather just talk about your mistakes. Because then, like, anyone that ever stands here, in fact, let me stop sharing because I want you to see me properly while I say this. Anyone who stands here and says they've never made mistakes, if they tell you they've been investing for 28 years, is either lying, cheating, or stealing. Like, that's my opinion. Because anyone that's ever been an investor and tells you that they have not made a mistake in 20 plus years, either hasn't been an investor or they're doing something dodgy. Fact. So what I've chosen to do in my life is rather just talk about my mistakes, and more importantly, explain what I've learned from them and what we've put in place to make sure we don't repeat those mistakes. So in my book, chapter 13 is all about the mistakes. And now, you know, I share these mistakes openly because I think it's important that people understand these mistakes, understand what we've put in place to make sure they don't happen again, but most importantly, help you just avoid those mistakes. So what I'm about to share with you is, like I said to you, one of the top 3 most important slides. Well, you had the 4 golden rules. That's one of them. This is one of the other top 3 most important slides of the entire week. So you've got 2 types of ways of investing. You've got old school investing and you've got new age investing. The old school way is all about control. The new age way is all about diversification and partnership. You've got a building. Could be any building. In the old school way, you borrow 60% of the money from a bank, 30% in private equity, and 10% in equity. And in the old school way, because they want control, the investors put in 95% of the money. So they control the whole building. And they're really, really excited because everything they've been taught and indoctrinated in their life is you must control everything. How many of you have been told, no, I must own 50% or more of the company, or I must own the whole building because I want to be in control? On the other side of the fence, the new age way, same metrics, bank is 60%, private equity is 30%, equity is 10%. But the new age way, the investors, they want to diversify and they want to use partnership. So they only put in like 10% of the money. So the people in red will be like, oh, but you don't own you're not in control. You can't make all the major decisions. No, you can't. But if you look at risk, the ones on the left, the red, they have all the control, but they have much more risk. And on the right, they have less control, but they have much less risk. On the left, the red ones, the old school ones, they have concentration. They've got all their money in one building. They've got all the control, great. But when the shit hits the fan, they have to fix it. On the other side of the fence, the new age people, they've got diversification. They've taken their money and invested in 10 different buildings. They've got less control, but when the shit hits the fan, they've got local investors and partners that fix it because they've got their money in the deal and they want to fix it. On the left-hand side, as an investor, you've got all the control, but you have to be active. And on the right-hand side, you've got less control, but you can be an armchair investor. You can make money while you sleep. On the left-hand side, it's all about scarcity. And on the right-hand side, it's all about abundance. So I'd recommend that you screenshot that, take a picture, do whatever you need to do. Because this is one of the most fundamental things that I'm going to teach you over these 5 days. And by the way, I'm not saying that the one is right and the one is wrong. There are people that still like the mindset of control and they want to do everything themselves and they want to be in control, and that's fine. That's the way they do their business. I'm not saying they are wrong. I do not do it like that. Our company does not do it like that. We do not believe in that philosophy. We believe in the new age way of diversification and partnership. And this is that moment where if you believe in control, I would strongly recommend that you say cheers, switch off the webinar, and don't work with us. Because it's very important when you're working with people that your values are aligned. And our values are the whole new age diversification and partnership. I fundamentally believe it is the only way to be a global investor. I believe it is the only way to diversify. And I believe it is the only way to do it safely and simply. And so let's go into this in a bit more detail. And I want to use a real life example of real life pain of how I learned this the hard way. So in 2016, I was part of the company and we had an investment committee, and this investment committee flew out to Australia and they basically met with a developer on the ground, and there was this building, Kensington. And they came back, they did all their due diligence, they said it's a wonderful building. And so we raised $5 million. They said, yeah, no, it's a fantastic building. It was a 28% return. They were going to build, it was just a piece of land. They were going to build the building. There were about 50 units. They were going to sell off the units, and everyone was going to make lots of money. 28% return. I put in a lot of money myself. To put in perspective, between myself and our company, we put in about $400,000. So when I talk about real money, I personally have lost $400,000 in this deal. Plus, okay? Forget about opportunity cost. So in the beginning, it sounded all good. They had pre-sales out of Hong Kong. I think they'd done 12 pre-sales. And anyone that knows anything about development, you generally secure the piece of land, you put your plans together, you get your planning permission, you do your pre-sales. Once you got your pre-sales, you start building the building, and then you sell off the building once it's finished. So this was a beautiful story, and these were all the brochures, and we were all going to participate. We're all going to make lots of money. By the way, all the money came from international investors. Okay? They had all the control. A bunch of gentlemen out of Pretoria. Don't worry, lots of property experience in South Africa, but now suddenly they're experts in Australia as well, and they've got all the control. Well, today, it's a big swimming pool. We've got a $5 million hole in the ground, and that investment committee has run away. The developer has run away, and we've got a $5 million hole in the ground. Now, myself and 82 other investors have been trying to figure out how the hell to fix this problem. Now, if you go back to kind of new age, old age, okay, this was all about control. So, but now you've got a problem. There's no local investors, so the regulator and the authorities don't care. And a bunch of international investors are now trying to be a developer in Brisbane. It does not work. Let me give you another example. That same group of gentlemen out of Pretoria were like, no, we know what we're doing. We're medical experts. So they went across to America and they did medical deals. And again, they did the entire deal, 100%, took all the cash, did the entire control. Well, in COVID, one of their partners was fraudulent. And rather than paying the banks the mortgage, he collected the rent and kept it. And so the bank repossessed the building. And the investors, including me, lost our money. Now, again, they had 100% of the control, but they had no local investors. And so no one cares that a bunch of international investors have lost money in America. And now you start to understand the essence of the pain of this left-hand side. And it's a very old school 20th century way of doing business, where you must have the control and do everything yourself. Now let's take the other side of the fence. We've got a deal with Feltman. I've told you about the one deal that's magnificent with Feltman. We've got another deal with them. And again, look at their track record. $100 million invested, 100 years experience, 7 recessions. Well, there's another building we invested in with them in 2021. And the whole deal was that they were going to, so again, it's called a value add. So you buy a building and you want to basically add value to it. So they were buying it at about 80% occupancy, and they wanted to lease it up, because the moment you lease it up and the income goes up, then basically the value of the building goes up. Now, it's a big building. I mean, this was like a $60 million deal. They were raising like $20 million in equity. We put in a couple of $100,000, maybe $400,000. I don't know the exact amount. And what was so interesting is that they had a 2-year fix on interest rates. And when interest rates went up, like they have over the last 18 months, they had a massive problem. And they had 2 options. They would either lose the building and lose all the money, or they would be able to, what's called recapitalize the building. So they did what's called a capital call. And the investors had to come and put some money in. But what was interesting is they put in $6 million themselves. Okay, so they put in $6 million. They sorted out the financing. They leased up the building. They did everything right, by the way. There's nothing they did wrong except for the market conditions changing and interest rates going up, which no one could have foreseen. But because they had the majority of the capital, they had local investors. And because we're just partnered with an institutional partner on the ground in America, they fixed all the problems. We didn't have to do anything. We had to raise an extra $30,000 to participate in the deal and just be able to make sure that we maintained our equity, which in the big picture of thing is nothing. I already told you about Manhattan. If something was to go wrong in Manhattan in this deal, and the developer on the ground has $6 million invested themselves, and you've got another $6 million coming from institutional partners in America and family offices in America, and you've only got $2 million coming from overseas. And even that $2 million, $1.5 million is coming from the family office clients, and only $500,000 is coming from us. Can you see how that we are a sucker fish on a whale? We're a sucker fish. We're that tiny little fish on a big whale. And I would much rather be a sucker fish on a whale in the new age way, in diversification and partnership, than try and do the deal all myself. The last 10 minutes is probably some of the most important training I can ever give you. And is it starting to make sense? Please just put in the chat box if this makes sense to you, because these are real stories, ladies and gentlemen. I'm not teaching you hypothetical stuff. This is the part ChatGPT can't help you with. Okay. Right, let's go to managing risk and compliance. Thank you for all the comments. Hopefully this really makes sense. Because if you want to know who Scott Picken is and you want to know who Wealth Migrate is, you need to know what's worked. You also need to know what hasn't worked and why, and most importantly, what we've done to fix it. Right, managing risk and compliance. By the way, we don't do any deals ever again that are not new age. Let me just go back to this. We don't do any deals that are not like this. None, zero. I refuse. I'll give you an example. There was a deal in London where a guy phoned me. He's actually one of our shareholders. Phoned me up and said, listen, he's a great guy. I love him to bits. He's a great guy. I really like him. He phoned me up and said, listen, I want to do this deal. It's a commercial deal. It looks really good. And I must admit, on paper, it sounded wonderful. I was like, cool. Like, I'm quite interested. I said, how much money are you raising from local investors? He said, none. I'm like, what do you mean? He says, no, I want to raise it all through Wealth Migrate. I was like, cheat, end of conversation. Just don't do any deals unless there's local investors investing. Right, managing risk and compliance. Again, in the resources, you can go read all about this. I did just allude to it in Core and Core Plus. I'll talk about that now. And then you got the compliance and the risk management. So just some of the regulation that's important here is that we work with Lemonway, which is the biggest digital wallet provider in Europe. They've got all of their European compliance. We are regulated by the FCA in England. So we are a juristic rep under the FCA in England. We are currently applying for our regulation in Europe as well. We have to because of Brexit. We're going through Portugal. It's a defined financial product. I know someone on Monday or Tuesday was asking about that. One has phase protection. You've got European cash custody. So that's Lemonway with all of their protections. You've got multi-layered compliance, which I've already explained to you. You've got transactional wallets, which basically means we don't hold your money. Your money is sitting in a third-party account, so it's protected and safe. And you've got data protection and investor ring fencing. So you've also got data security. The guys that built our platform, so we built our own platform, they built a platform out of New York that did $13 trillion a year. So trust me, they understood security and have helped build our entire solution from a security perspective. In terms of safeguarding funds, well, you got external cash custody. So the first thing is your money is sitting in Lemonway. We don't, some people out there that tell you there's a group out of the Seychelles that tell you that you've got wallets, but you don't actually. You've got some lawyer with a discretionary trust account, and basically the money's all in an account. They run it on a spreadsheet. That's not external cash custody. Discretionary portfolio management. So you've got people looking after the deals that are separate from Wealth Migrate. If Wealth Migrate was to disappear tomorrow morning, yes, it'll be a hassle for you. But the point being is that all of those deals are managed by local partners. You've got designated investor accounts. So again, every single deal has its own deal wallet. You've got ring fence deals. So something that happens in funds is that if one deal's good and one deal's bad, they rob Peter to pay Paul. Like they take money from the one to the other. You can't do that. Every deal is ring fenced. You've got designated corporate members. So that's each deal is set up individually. You've got external custody of investments. So we've actually got our juristic rep, or we're the juristic rep, but our representative is in England. And then you've got operational and investor segregation. So this is one that we're always working on. I mean, with people like me and Paolo, we are involved in operations and we're involved in the investment side of things as well. So it's not completely separate, but we do try and separate as much as possible. Then how do we select and designate deals? So again, you can go and read the cheat sheet. I'm not going to go into this in a lot of detail, but there's basically 4 levels. So you can see here that at the bottom here, you got risk. So you got low risk and high risk. And then on the left-hand side, you got return, low return and high return. So a core deal is effectively low return, low risk. And it tends to be like a deal. It might be in central Manhattan or central London, and you've got a government tenant and they've got a 20-year lease in place. And there's very little risk. It's sort of where the institutional capital likes to go. And it's got low returns. Then you've got a core plus. It's a good deal. It's safe. But maybe it's in Atlanta or something. It's not quite New York, it's Atlanta. And so it's kind of a core plus. Then you got a value add, which is like that building I told you about, where the building might be 80% leased and they want to add value. So generally there's execution to add value, and there's more risk. So whenever there's execution, there's more risk. And then finally, you've got opportunistic, and that might be like a new development where you're buying a piece of land, they're putting up a building, they're selling it. So there's a lot of opportunity, but there's also a lot of execution risk. And that's why, the return is higher, but so is the risk high. So this becomes very useful. And if you go to our platform, and I'm just going to log in for you here, every single one of the deals is designated so that, I hate the fact that when you normally invest, you have to go look and read page 36 pages and look at all the T's and C's and everything else. Like what I like about the way we've set up our platform is that when you log in and you go look at any of the deals, like you can literally go in and you can see here, where is the investment risk category. So like this one in London is a private equity opportunity. It's a high growth, 25%, but you can see that it's in opportunistic. It's higher risk as well. Make sense? Okay. Are you with me so far? I feel like today everyone's quite quiet and docile in the chat room. Is there a reason for that? Is this heavy? This should be light for you. I made the mistakes. I lost the money, and myself and other investors lost the money in the past. Now I'm sharing with you how you can avoid losing those mistakes, making those mistakes. Okay. Right, tax and structuring. This is one that's just a bit of a warning. I see people all the time going out, meeting their financial planner, setting up a cheap structure in the Seychelles or Mauritius or the Isle of Man or the BVI. And one has to be pretty careful around whether you can invest. I mean, I know this one gentleman, he was a South African. He set up a structure in the Seychelles. He immigrated to Portugal. He had all his investments through the Seychelles. And then the Seychelles got blacklisted by the European Union, and he couldn't get any money into his bank account in Portugal. And he actually, even though he was quite a wealthy man, actually became very cash poor and became very desperate. And that's the challenge of being in in the wrong kind of tax haven, if you want to call it. And that's why I strongly recommend if you're thinking about tax and structuring, that you apply to join the mastermind, because if you can get access to the family office and to Garth and the team, they don't put you in a box. They are experts in looking at where do you want to live in the world? What does your lifestyle look like? Where are your different investments? And then they help you tailor make a solution for you and your family. So I can't overemphasize how valuable this is for you in terms of that process. I know, Alan, you're online and you and I were having this conversation literally yesterday. And again, I've worked with a lot of people around the world. In fact, I want to repeat what Alan and I were talking about. I've worked with a lot of people around the world. Are Garth and his team perfect? No, no one is perfect. Have they made mistakes? Of course they've made mistakes. But what I look for in people now is, are my values aligned with them? Are we trying to achieve the same thing long term? Are our fee structures aligned with investors to make sure that we're setting up investors to win? Yes, I'm allowed to make a profit, but it can't be at the expense of the investors. It needs to be alongside the investors. All of these things are materially important in terms of what you're looking for. And it's one of the reasons why I value so much the fact that, why we work with this family office in terms of helping people get results. Right, I've got 3 gifts for you that are in the resources. So there's 3 white papers that I wrote a couple of years ago. And for the beginners, there's the Invest with Confidence, the 5 laws of building wealth through real estate. For the intermediate, there's the 5 keys to offshore real estate investment success. So this is how to start investing internationally. And for the more advanced, there's the 4 ways to expand your global real estate portfolio through strategic partnerships. So all of you will get access to that. Please don't say that we haven't given you lots of value over the last couple of days in terms of this process. So let's go back to the framework. So I introduced you to the framework on Monday, and hopefully now it's all starting to make a hell of a lot more sense. I said to you that you need the right partners. So I said the 4 elements to passive income and freedom. You need the right partners. Do you think after everything I've shared with you that partners is on the top for a reason? Yes or no? Just type in there yes or no. Can you now see why partners is on the top? You need the right partners. You need access to the deals. There's no point. I can teach you all day long about why you should invest in Manhattan. But if you don't have access to the deal, what the hell's the point? But you need access to the right deals as well. You need the right information. Back to that that story in Detroit, people were like, oh, but you're buying it at a 50% discount. And people are like, oh, I'm so excited. I want to invest in Detroit. But no one was telling them that a quarter of the city was shut down and that property was never going to recover. That's the reason it's the Rust Belt and everyone was leaving Detroit, was because the car companies were all going bankrupt. No one wanted to live in Detroit. It's a shithole. I don't know if you've ever been to Detroit, but it's a shithole. And so the property prices were never going to go up. That's the wrong information. You need to make sure you get the right information. And lastly, you need diversification. Because even when you have all three of the above, the right partners, access to the right deals, the right information, it doesn't always work. And that's why you need to diversify. Ray Dalio said, you need 15 quality investments. And if you do that, you'll reduce your risk by 80% and you'll increase your risk return by a factor of 5. That's why diversification is so important. You're never going to get it right 100%. In my experience, if you invest in 10 deals, 8 of them will work according to plan. 1 of them might be a bit average. 1 of them might not work at all. That's why you diversify. And if that's scary to you, I'm sorry. That's how it works. It's better than the stock market, where, according to Tony Robbins, 96% of active fund managers don't even beat the average. 96%. That's what people are doing when they're just trusting their financial advisor. I'm not saying you shouldn't use the financial industry. I'm not saying that at all. I'm just saying you should invest like the top 1%. So now hopefully you can start to see how this framework comes together. That's why we call it the PAID framework. Because if we go back there, you can see the green, PAID. It's what we call our PAID framework. And this is how you build a diversified passive income of $1,000 or more as soon as possible. This is the formula. Countries, currencies, assets, partners, and time. And as you can see, it's all about the passive income. So who's up for a bit of a game? We've been, I know it's been quite heavy. Let me stop sharing quickly. Who's up for a bit of a game? Yep. We've had lots of heavy stuff today. Partners and losing money and how do you avoid it and all that sort of stuff. Risk. Okay, you're up for a game. Okay, cool. So let's have a bit of fun. So I like this game. I can't remember where I learned this game, but anyway, I like it. So I want to give you a challenge, an extremely direct question. Now, you go see a doctor, and this doctor says that you've got a serious medical condition. And the doctor says you have to lose 10 to 15 kilos as quickly as possible. Like your life literally depends on it. Now, again, I hope this never happens to you. I just want to be clear. This is an illustrative thing. I just want to prove a point. So again, just to repeat, you go see the doctor, and the doctor says, listen, Scott, you're overweight. You've got a medical condition. You have to lose 10 to 15 kilos as quickly as possible. There are 2 options. The first option is you can go buy a home study course. You can go and buy the set of DVDs, or you can go and, go online and do this course. And the second option is you have a coach, and they turn up every day. They knock on your door. They say, hey, come on, Scott, time to go and do some exercise. Which one would give you more confidence? Option 1, the home study course, or option 2, the coach? And if you think it's the coach, just type in the word coach. Like, if we're honest with ourselves, each and every one of us knows for a fact that to get results, you would want that coach turning up. If your life depended on you, it would be that coach turning up to hold your hand, to knock on that door. Some mornings it's raining, you don't feel like it. Some mornings you had a bad night's sleep. Some mornings your child did whatever, kept you awake. But that coach turns up, knocks on your door and says, I know all those excuses. Yeah, I've heard it all before. Come, we're going to do some exercise. And so for me, when it comes to your wealth, why would you not do the same thing? And specifically in terms of building diversified passive income. So for some investors, like for the really experienced, sophisticated, those that are confident and motivated beyond belief, we've literally created everything that you want, everything the doctor ordered to be able to do it. I mean, I've told you the 4 elements to passive income. You need the right partners, you need access to the deals, you need the right information, and you need diversification. Well, let's look at it. And we take that concept. Asset class mastery, that gives you access to the right partners. Access to the deals. Go on Wealth Migrate. You got access to the deals. The right information, wealth going global. Literally, all the information from around the world. Where do you need to find the right information? And diversification, well, you've got the platform. On the platform, and I did this, I showed you on Monday, you can diversify across countries, currencies, assets, partners, and time. Does this make sense to you? So again, if you're super experienced, or you're really motivated, you're really confident, and you say, right, Scott, I don't need you, no problem. There it is. You've got the home study courses, you've got access to the platform, you've got everything. Everything needs to succeed. Boom. But we've proven for over 2 decades that it works so much more effectively when you have a coach and a team that can literally help customize your system and your portfolio. The problem is that it's expensive. And so the question is, how do you provide that one-to-one support and coaching at a lower cost? Like, how do you democratize myself and the family office in terms of this process? How do you do it? And it's simple. You use technology. I started on Monday and I literally said, give me 2 seconds here quickly. Okay, so someone's trying to deliver wood and they keep phoning me, and my nanny, unfortunately, is at hospital today. So I've got no one else at home. Right. So how do we do this? Well, we use technology. And I used the analogy already where like Uber has allowed each and every one of you to have a private driver. You know, literally Airbnb has democratized access to property. Netflix has made us, I mean, all of us have access to a plethora of entertainment. So we use the exact same model. We've used our experience over the last 20 years. I actually have no idea how much money I've spent, but it's close to $1 million in terms of coaching programs, masterminds, and everything that works. I've also been trained as a certified international coach. So I did a program that took me over a year to become that. Because we decided, and this is the part, and Ellen, you maybe want to screenshot this slide. You know, the investment space is broken. That's our fundamental belief. And we decided to fix it. We know that the framework is you need partners, access, information, and diversification. And so we built it. With my partner, Shane, we literally built it. You've got access to asset class mastery with the right partners. You've got access to the deals. You got the right information, and you got diversification. But according to Harvard, there's a 400% better chance of success if you have a coach than if you try on your own. And I love this little video because it sums up, and I played this for you yesterday, but I'm playing it for you again because it sums up the power of a mastermind.
No, this is extremely predictable. There's tons of research around it. Humans change 5 times faster in groups than they do with a one-on-one coach, consultant, or therapist in that case.
Wow.
So I started looking back at business models and people who had done this effectively over the generations. Masterminds aren't new, folks. They're not new at all. People have been doing this for thousands of years. And when you put a collection of people together who are all committed, all driven, and all so want to make the right changes happen, and you give them a leader to follow who's willing to get in the trenches with them, all of a sudden you start finding real, rapid life or business transformation.
You know, what he said there was, humans change 5 times faster in groups than they do with a one-to-one coach. You need a collection of people who are all committed, all driven, and so want to make the right changes happen, and give them a leader to follow who's willing to get in the trenches with them. And all of a sudden, you start finding real, rapid life and business transformation. So that's why I ask people the question, do you want to get out of your comfort zone? Because this is where the magic happens. And if you want a coach, you can probably pick up my energy, whether you need the carrot or the stick. If you want the family office, if you want someone in your corner, then that's why we created the Diversification Mastermind. That's literally what we put it together. And how it works is the focus is globally diversified passive income and portfolio growth. We follow the formula of diversifying across countries, currencies, assets, partners, and time, with passive income sitting in the middle. And we break it down structurally into long-term planning, medium-term planning, and then daily activities. You know the process. I've taken you through the partnership between ourselves and Calio, and it's all about getting results safely and simply. And there are literally 9 steps that we take everyone through in terms of this journey. So again, right from day one, I said to you, the easiest and fastest way to get to success is to copy successful people. The same with wealth. The easiest and fastest way to wealth is to copy wealthy people. These 9 steps are what the family office is doing with the wealthiest families in the world. Why not copy them? Those that get access to the mastermind get access to our learning environment, and they get access to our investment environment. And so if you had that medical condition and you said, right, I want to coach, and you want to coach for your wealth, then I would strongly recommend that you take this link and apply. Maybe Kelly, if you could just drop the link for me, if you don't mind, so people can just click on it, diversificationmastermind.com. Do you remember we started on Monday with Jordan? And I literally said, he's a 55-year-old high net worth, worked very hard in his life, wanted to build a portfolio to ensure his wealth was preserved. Well, if you take that, when he came to us, he wanted to build diversified passive income. He wanted to do it simply and safely. He wanted to diversify across countries, currencies, and assets. He wanted to get effective results. He wanted the right knowledge for him and his family. He wanted wealth protection, a plan B, and peace of mind. You want to be held accountable. Again, accountability is so important. Anyone who's ever been successful, and we've just been through the game of the doctor, is accountability. He wanted a family office to help manage his affairs. Now it's hopefully making a lot more sense to you. He wanted generational wealth for his family. He wanted a wealth plan, and he wanted results. And I asked you on Monday, who resonated with Jordan? And many of you said yes. But hopefully now you can truly understand what we were talking about when we went through this. I shared with you Victoria, an entrepreneur in her 50s, devoted to family and business, aiming to build generational wealth. She wanted a streamlined investment strategy. She wanted to feel empowered to make the right decisions. And she wanted financial freedom. And again, I asked you if you resonated with Victoria or with both. Now, it's at this point, and I love real people, real stories, that I wanted to share an interview I did with Cynthia. Now, Cynthia is a single mom. She's divorced. She's got 3 kids. She's American, but living in Italy. And most of you sometimes sit there thinking, going, oh, but I can't afford to be part of a family office, or I don't qualify for a family office. And it's amazing how we put ourselves into boxes. And so I want to share with you this interview I did with Cynthia, because again, it's real people, real stories. And I would strongly recommend that you listen to what Cynthia is saying. But also, while you're listening to what she's saying, think to yourself, well, if she can do it, I can do it. And notice how she also was sitting around. She was so nervous. She didn't know what to do. She sat with, for 4 years, kind of paralyzed. And then she finally took action. She came and met with us. She joined the mastermind. She met with the family office, and she started to earn an income within 30 days. And again, if she can do it, you can do it. Once I'm finished with Cynthia, and the reason I'm starting with Cynthia is because I want you to truly understand real people and real stories. After Cynthia, we're going to move to an interview with Selwyn. Now, Selwyn is the co-founder and CEO of a private equity firm. He has a PhD from Cambridge. He's got over 2 decades worth of experience in investing. And Selwyn's going to be sharing with you how he manages risk and how he finds partners. And I think the reason that I'm starting with Cynthia is I want you to realize that this is within your reach. And once we've finished with Cynthia, I'm then going to take you to the next level of truly what the wealthiest people in the world are doing and how they find their partners. And you'll notice the essence of everything we've been through this morning. There's a straight line graph. There are fundamentals to doing this and doing it right. So do me a favor, enjoy this video. While you're watching this video, try and comment all the way through. So if you see something, you hear it, say like, wow, that, because what you'll find when you do that is that you are synthesizing the lessons that you're learning. Anyway, over to you and to Cynthia. Let's see what real people and real stories. And the whole time that you're watching this, imagine if this was you. So Cynthia, thanks so much for joining us. I deeply appreciate you jumping online. I was hoping for you to be there live next week, but you're off to Paris. So sounds like you've got an exciting trip organized.
More rugby, more rugby. Can never get enough.
Fantastic. So you've got a confusing accent for everybody. You've got an American accent, as I understand, did a huge amount of business in Hong Kong and now live in Italy. Tell us a little bit about yourself, just so the kind of people know who you are.
Yeah, I'm an American. I graduated from college and spent 10 years in New York City in the advertising profession. And during that time, I kept putting on a backpack and leaving and traveling around a part of the world and putting on a backpack and leaving. And the third time I did that, I backpacked around Asia and ended up in Hong Kong permanently, ironically, to watch the Rugby Sevens. And I rolled into town to watch the Rugby Sevens, and I stayed 10 years. And during that time, I worked in marketing in China. So I continued my profession. And relevant to this conversation, I took my first year's salary almost, because I was running around with backpacking money, $100 there, $100 here. I took my first year's salary and just banked it into what I thought was a mutual fund. It was something all the expats were doing. And then I just left it for 25 years. And I worked in Hong Kong, and I met my husband and had 3 kids, and we didn't want to raise them in Asia. And we decided to move to Italy. He was English, I was American. We decided to move to Italy, got to Italy, and started renovating a big house. That was a big money sink, and went into olive oil picking, olive oil making. So farming, that's a big money sink, as all the farmers in our mastermind know. And so I ended up here separated from my husband, with not having worked for 15 years, because I'd been a stay-at-home mom and an olive oil farmer. And that's how I ended up. That's how I ended up finding you all. I think I took Scott I took an online course. It wasn't even an online course. It was one of those Jeff Hayes film productions, like Money Matters or something. And it was just money
Revealed by Jeff Hayes.
Yeah, Money Revealed. And I met you on that, or I listened to your speech on it, about how property was the last bastion of the wealthy, and that sort of one thing that the average person doesn't get into. To get into property back then, 20 years ago, you needed to have a lot of money. And you talked about how you wanted to make people with $100, $1,000, eventually, $10, be able to get into that. And it always stuck. And I didn't see or hear from you again for 5 years. And then I think Wealth Migrate came up on my radar, probably some social media radar. And I jumped on it. And that's how I found you all again.
And what sort of challenges were you facing at the time? Like, what problems and challenges? We all, there's a great thing that we move 5 times more away from our problems than we do towards our pleasures. So we tend to take action because of problems, not pleasures. So what were the problems or challenges you were facing?
Yeah, the problem was huge. The problem was I'm living in a foreign country. I can't go back into my old career, which was China media, because I'm living in Italy. I had 3 kids to feed. I'd left my husband. And I was like, where's my skill set? So I was actually at the stage of like, just how do you put food on the table? And I, found a place to live, suddenly had 5 income streams, and all 5 of those income streams dried up during COVID. And it was the first time it hit me that I was working for money, selling my time for my hours for time, and that my money wasn't working for me. And COVID and that incident and that realization happened at the same time that 20-year fund came to maturity, and I suddenly had a chunk of cash. It wasn't a lot of cash by any means, but you got to start with what you start with. And I was in that frozen position of like, what do I do with it? Like, I need this money to work for me, because I'm over here scrambling to find a job and to put food on the table for the kids. And I didn't have any debt. I was fortunate. I owned my own home. I owned my car. I didn't have any credit card debt or anything. So in that way I was lucky, but I was really at that paralyzed, what do I do? What do I invest in? I've read enough, read The Motley Fool every week for 30 years. I thought I was relatively financially literate, but I was frozen. I was just like, what do I do with it? Because
yeah, sorry.
No, I was just saying it was just at that age, where my kids are 20, they can make fiscal mistakes. And I was at that age where I felt like I don't have another, ride it out 20 years and the stock market always rebounds. I don't have another 20 years to ride it out. Like I had to do that's what my fear was.
A lot of people, a lot of people talk about wealth protection, and that's what I'm hearing. It's one thing to grow your capital, but you also want to protect the capital you've worked, so hard to create over the years. Why did you choose to work with us? What was it that attracted you?
I mean, I had finally found people that were exactly like me, like from multiple parts of the world, maybe dealing in multiple currencies. We have, some gentlemen in the mastermind that might be South Africans. They're living out in New Zealand. They, the typical, the old fashioned five flags. You live in one country, you earn money in another, you've got a bank account in a third, you pay taxes in a fourth. And it doesn't really exist anymore. But it was very hard to find, like-minded people who understood different parts of the world and who naturally understood diversification. And the mastermind narrowed that down and made it even more specific, diversifying across time and currencies and assets, is even more focused. But just the general idea of diversification. I mean, all my European friends just invest in European things and all my American friends just invest in US things. And a lot of my Hong Kong Chinese friends are heavily invested in China and the BRICS economies. So I really liked that. And then I liked the overall philosophy that we were trying to make what's available to the 1% available to the average person. And that really resonated with me, because no matter how much you learn, you're always thinking, what's that little bit I don't know? What's that part of the puzzle I don't know because I'm not, a high net worth individual.
So tell me, in terms of, you took a leap of faith. We've all done this, where it's like your sort of intuition's telling you to do something, but there's a cost involved, and you're like, I don't know if this is going to work for me. And what's been your experience? I mean, we've been on a journey now for the best part of nearly 12 months, actually. And what's been your experience, being part of this diversification mastermind?
This diversification mastermind was different from every other sort of course or challenge or, I don't know, group I've ever joined, because it took you from the philosophy of how you're supposed to be investing and actually provided us with answers. So it took us from, it's not just, I didn't need the mindset stuff anymore. I felt like I was already there. And it took us from the mindset right to like, well, here's some ideas that you can invest in. And, let's all jump into this together. And if you're not going to invest in what we're providing, here's some other experts in different asset classes who you can go buy a promissory note from, or go buy an EFT from, or go talk to someone in a private, what do they call it? The family management, family asset. What are they called? Yeah. So you provided us, you weren't trying to be all things to all people. It was like, I'm Scott, I'm the property guy, this is what I know. And I'm never going to try and sell you a commodity. And I'm never going to try and sell you stocks and bonds, because that's not what we focus on here. But if you want those things, here are those experts that we're bringing into play as well. So I liked it that it was, it was holistic. Everybody sort of knows what they know, and that we draw on the experts in each related field for people to either choose to work with or not. But so you got that learning curve, but you also get that ability to, to execute and make investments with where you want them.
I think what you just said there is so important. It's the execution. At the end of the day, we got to get results. And, there's absolutely no point in getting more knowledge. And, it's that whole saying of people think knowledge is power. It's rubbish. Applied knowledge is power. So, one of the things I love about your story is that, you've gone and met with Callio. So, again, I would have talked quite a lot about Callio already, but, most people don't get access to a family office. A family office is literally for the super wealthy. They manage $600 million, only 60 families, but through an alignment of interests, actually. So they believe in, helping everybody get access to the same information, the same opportunities. And because of that, they agreed to exclusively work with the mastermind. And because of that, you and I have got access to their skill sets. Talk us through your experience with Callio, because it's been an interesting one to get your feedback.
Calio is phenomenal. You have a half an hour free Zoom meeting with them, and with the president in the room, not just not just someone who's going to execute. And they say, "What's your story? What are your needs? What's your financial situation?" And I pulled up that matured fund that I had and said, I need to invest this, but I don't want to, I can't invest it for the long term. Here are my needs. I have immediate goals. I have 3 children that have just gone off to college. So I suddenly have immediate financial goals that I'm not going to be able to meet if I keep just relying on my income or selling time for money. And they listened. They asked really smart, relevant questions I wouldn't have thought of, but they were particular to me. And I didn't feel like I was being put into a box of you're this type of investor, or you're this type of investor, or you're this type, And it wasn't just the like, are you high risk? Are you low risk? It was really they really tried to understand my needs. And within 24 hours, they had a proposal to me that said, here's what we're going to do to get you money right now. And then here's what we're going to hold off on and keep discussing and think about and get you into eventually. But here's what we're going to do to solve your immediate problem. And within 1 month, I had income coming in from an investment from them, which just liberated me. I mean, it was just the buffer I needed to not panic about money anymore and to make the rest of the decisions slowly and, from a different mindset.
It's so interesting what you're talking about there, because the most of us just go along, we meet a financial planner, they put us in a box, we stick our money into something we don't even know what it is, and we don't get paid an income. We get promises of long-term retirement, but we don't get an income. And what you just said there is within 1 month you got income back in your pocket. Now, in my belief, income is freedom. So and I mean, I know for you don't need to go into the personal story, but even then, I mean, it had a dramatic change for you in quite a quick space of time to give you that peace of mind.
A huge space of time. I mean, I'm an online English teacher. The year after COVID, the Chinese government banned all English teaching online. And I went from a 7-day-a-week job to nothing, to zero. And it was, and given that it's China and China's unpredictable, there's always those undercurrents and those rumors among online teachers. They're going to do it again. They're going to do it again. But having that financial buffer means to me that if it happens again and China locks out all online teachers, I'm not going to be sitting here with zero income. I mean, it's a safety net that's just unbelievable to me that someone who is not by any means a high net worth individual can have your money working for you, can have my money working for me, and give me that peace of mind.
Yeah. So tell me, 12 months ago, you could have been like so many other people. And again, thousands, I don't even know, hundreds of thousands of people have watched me present over the last 20 years. Most of them sort of hear it and don't do anything. 12 months ago, you heard it, took action. If you hadn't have taken action, how would the last 12 months have been in your mind? Like, what would have been the difference?
I can definitely tell you I would still be sitting there with that matured mutual fund in the bank account or pension fund doing absolutely nothing, because it matured 2 years before or a year before I met you all. And I was like, right, get this invested. This was, it was the number one goal every month. Get this invested in doing something. And I just didn't know what to do. I had so many ideas and so much information coming from me. And that's where I was 1 year ago. And, within 2 months of starting the mastermind and, 2 weeks of meeting Calio, that money was invested and working for me. And I honestly believe that if I hadn't found you all, I'd still be sitting on it. It would still be doing nothing. It would still be sitting in a bank account waiting to be invested.
Yeah. No, I mean, you just heard what she said there in terms of, I assume you can all hear what I just said. She said, she sat around for 4 years, and within 30 days, 1 month of meeting Calio, that money was invested. And I hope you heard that. You can just let me know in the chat box if you heard that. That's brilliant. Or maybe worse, given to a financial planner being eaten away by
to lose more money over 20 years, right?
Exactly. Yeah. Tell me, why is this different? There's lots of masterminds out there. I mean, there's a plethora of information on the internet. Why has this been different for you from, your other previous experiences?
The fact that our philosophy is we're all going in the same direction is wonderful. But I think certain segments of our life. And when you go into that initial conversation with all of us masterminders, you're breaking down what are our personal life goals, what are our financial goals. Life is more than just finance, but finance is one of those highly emotional, people have a hard time talking about it. It's not polite to talk about money. Maybe we don't discuss it with our best friends, but the mastermind is that one place I can go to where we're all talking about money. It's allowed. It's the purpose of it, and it's that space where we all throw out our mistakes. You've shared with us. I tried this, and this. This is what happened to this property, and this didn't work. We all can throw out our situations, and we're just all in this. We're just all in the same space. We're all in that. Let's talk about money. Let's learn as much as we can, and what are the next steps? What are we going to execute for each other? And it's just such a nice space to be in, because you can go out in life and maybe not even talk to your spouse or your best friends or your brother or your kids or about money. And it's just that space, because it's such an important part of our lives. And it's that space where we all have permission to do that. And we're all going in the same direction.
Yeah, no, I love what you said. And I think, there's so much power in collaboration, and again, just simple metaphor, birds flying in a flock can go 70% further. So unfortunately, I know that, I don't know if you were the same, but certainly myself, I was trying to do it all on my own for 14 years.
Yeah.
This was I'm getting nowhere doing this strategy.
Right.
Tell me last thing, if someone's sitting they're sitting here, they're watching this and they're sort of saying, it sounds too good to be true. I don't know, what should I do with my life? Have you got any advice to them? You've been in that situation. What would be your, advice, recommendation? We don't get financial advice.
I think the problem is that if you've made it this far in either the Wealth Migrate platform or the Wealth University you've done, you're already an intelligent person. And that almost works against us, because we go I'm smart. I can do this by, oh my God, EFTs. All I have to do is Google top 10 EFTs or, jump onto one of those crowdsourcing platforms or so. I can do this by myself. And I think it's almost a hindrance being somewhat financially knowledgeable. I mean, it's almost a block, because you get to that. Yeah. I've taken the course. I've done a challenge. I can figure it out from here. But there really isn't anything like finding the partnerships that we have in this group. I mean, there is no way, for all of my love of reading financial documents and being on financial websites and blogs, there isn't any way I would have ever found the partners to invest with and to invest in without being in this group. There's just no physical way I could have ever, industrial buildings in Texas or, healthcare centers in Brisbane. How am I going to find those sitting here in the middle of Europe? So, yeah, I think the partnership is the number one reason to join the mastermind. It's not just about the knowledge. It's about how do you execute, but you can't execute unless you have the deals in front of you. And you can't have deals in life, in any aspect of life, unless you have good partners. And it's a partnership that I would highly recommend people to, it's worth the entire investment. Yeah. Is the partnerships abroad.
Well, thank you so much for your time now. Thank you for sharing. Right. And for me, the thing that I'm most grateful for with the mastermind is the amazing community that we've got. And, you're one of the stalwarts that are leading that community with your energy and everything, which I deeply appreciate. And I love, what I love most about your story is that most people assume that everyone's uber wealthy and got millions of dollars and, highly sophisticated and whatever. And we're not. You and me are not like that, and yet we can get access to the same knowledge and the same partners. And the thing I love most about when you shared with me your story, it was well, look, I've listened, I've acted, and look at what it's given me, and in quite a short space of time. And I think I just deeply appreciate you sharing that with people, because hopefully it can inspire others to get the results for themselves.
Yep. I would say jump. I mean, when I think of where I was 1 year ago, it's a million miles away, and not just because I have income coming in, but knowing what my next steps are. I know where I'm going. I know where the next chunk of money is going to go into. I know what, I want to invest in. I know what I don't want to invest in. And I know the partners that I want to do it with. And that's just a huge weight off anybody's, financial shoulders.
Awesome. Well, we look forward to further results from you. Thanks so much.
Good. Thanks, Scott.
So what did you think? let me put my camera back on. And you can see that Cynthia said, thank God for this mastermind, the partners it brings us, and the exponential learning curve that it's gifted us. So just a couple of things I'll stop sharing here quickly. I really enjoyed that interview because for me, it's real people, real stories. There's so many great comments and things that have come up here. So well done to all of you. Jane said something there that I think is so important, that a lot of people, you'd be surprised how many people I talk to in the mastermind were like, actually investing is lonely. In fact, I think Connie and I had this conversation 2 days ago. It's a lonely space. Like, who do you talk to? Who can you go out there and have a discussion? You can't go down the coffee shop or the pub and generally have a conversation with your mates about money. It just doesn't work like that. It's actually, investing is a very lonely space. And as Cynthia said, it's really nice to be in an environment where you can actually talk. And like, this is, we do things like fireside chats, which are obviously online, and we do wealth weekends where you can literally go away and meet with other like-minded investors and have these conversations, and not just with other like-minded investors, but have me in the family office and the partners we bring in and whatever at the table, and really facilitate these conversations in terms of that process. And yeah, Jacqueline, as you said, her story is so real, and it is. And the reason I like to share these stories is it's real people, real stories. The other thing I wanted to share was that someone asked, and I think it was Bruce, but Bruce, your question was like, how transparent are your fees? And I wanted to show you here, like, not like on all the different deals, you can go in and there's complete clarity around like what's happening. We don't have an investment calculator on all the deals, but if you go through and you literally say, right, I'm going to invest $1,000, you've got the investment calculator. You can see exactly what the fees are. You can see we've got, the success fees. So we only make money after you make money. And then we got like, so our whole philosophy is like Airbnb. We set it up for success. You can do the returns with fees, without fees. You can see exactly what it is. So I just wanted to kind of answer Bruce's question around fees from earlier. I was just looking through while we were talking with Cynthia there. And, I don't believe in the old way of, the old school way of hiding it within the documents and no one knows what the hell is going on. Like, our 3 core values are trust, transparency, and alignment. Trust, transparency, and alignment. So it's very, very important in terms of that process. Okay, so let's pivot now. And it's time to go to Selwyn. And Kelly had a great idea. And she said, listen, these great nuggets, these great takeaways, you had Gary on Tuesday, and you had Anthony yesterday, and today you got Selwyn. And so what I'm going to do is I'm actually going to create cheat sheets on their most important information and knowledge that they are sharing. And those cheat sheets will be available to the people that are in the VIP and the wealth hackers. So we're consistently saying in our lives, how can we make it easy? Because, yeah, it might be a 40, 50-minute video, but how can you actually put it into 2 pages so you can literally walk away with cheat sheets? So just to remind you quickly, in terms of, the options, you can get started right with the passive income challenge. You got Wealth Going Global, the right information. You got Asset Mastery, the right partners. And then you got the family office. Now, why I'm showing you this is I'm about to show you that those that are part of the mastermind and literally get access to this right at the top here, that's what Cynthia was talking about. And if you want the same experience as Cynthia, then just go along, take that link and apply and chat with the team. Now, I want to basically go to the next thing. And Selwyn is an incredible gentleman. Him and his business partner, Glenn Scorgi, they're both chartered accountants. He's actually got a PhD from Cambridge. He's a CFA, which, by the way, CFA is even higher than a chartered accountant. Both of them have over 20 years of experience in terms of investing, institutional investing, property investing, business, private equity investing, etc. Like, when you talk about finding partners, you talk about managing risk, you talk about doing due diligence, you don't really get access to these type of people. They basically only do this for family offices. And now with the whole use of technology and democratization, and with our partnership with the family office, I managed to get Selwyn to come and to do a presentation to teach us about what you need to know about partnership. Now, listen to what he says here, because this is so critically important, that even with all the money that Selwyn has, and remember that he's got more than $1 billion behind him, he still doesn't try and go to Germany and do the deal all on his own. He still doesn't try and go to Manhattan. And you're going to hear this now, but I want to reinforce this for you. How, again, we are aligned with the principles of new age, partnership, and diversification. Enjoy. This is an extremely powerful interview. Selwyn, it's awesome to have you. Thanks so much for joining us. Sorry. It's wonderful to have you online. And just before we get started with you, I wanted to share with people a little glimpse into kind of you guys' background. So firstly, in terms of Callio Private Equity, I just love this, the front of your website, where it's literally communities are more powerful than networks. We're going to talk a lot about this today because, I always say the number one way to manage risk is the right information and the right partners. And how do you do that? Well, it's about getting access to the right networks, basically. You know what I mean? And what you guys do is take it to the next level, which is community. And it's really what we're doing. I mean, on this thing, this diversification challenge is a community of people. At Callio Private Equity, we aim to build and grow community through our investment and advisory activities. We bring it together like-minded individuals and companies that exchange resources and advance ideas, deepening the solidifying relationship of trust. And if I go to team, just to give a little bit of an introduction to Selwyn. So there's two partners, Glenn and Selwyn. So Selwyn has over 20 years of experience consulting and banking locally and abroad. He began his career at McKinsey & Co. in Johannesburg, undertaking projects across Africa. He subsequently co-founded and managed RMB's opportunity in real estate in the global real estate portfolio, and later co-founded the RMB Westport Real Estate Development Fund, the largest sub-Saharan and real estate private equity fund at the time. Prior to joining Callio Private Equity, Selwyn led ABSA's commercial property finance business in Africa as a principal for the ABSA Group. He currently serves on the board of trustees of the African Leadership Academy. And if you don't see it here, he has a PhD, which is a doctorate in mathematics from Cambridge University, which is pretty impressive. So without further ado, Selwyn.
You sound a little bit like my mom, but I appreciate that.
Well, someone has to tell people you came from Cambridge. When we're talking about risk and due diligence, I want people to at least kind of have a bit of a sense of who they're talking to, if that makes sense, in terms of it.
Thanks.
So let's get started. And before we go any further, just tell us. I mean, I've read your bio. No one ever likes to brag, so I do it for you. But tell us just a little bit about your journey. I mean, really, you can see you've got a very extensive journey in property, in real estate, in funds, in private equity, etc. Just talk a little bit about it. How did you get into it? And just so people have an idea of who's in the room.
So Scott, I mean, you've read out my bio. I started as an academic and realized that wasn't really an expression of myself. I didn't want to be in research, and I didn't want to be stuck in an institution. And the best way for me to get diverse experience in commerce was through consulting. And when I joined McKinsey in Johannesburg, it was the fastest growing office in the world, McKinsey's fastest growing office in the world. And we had very diverse clients and very diverse projects in operations, strategy, organization, capital planning, and so on. After being there for a few years, McKinsey has gone through phases, as people on this call would know. I joined RMB, and that was actually life-defining for me, joining RMB. My current partner, Glenn Scorgi, was one of the first people that I worked with when I joined RMB. And in your point earlier, I'm actually glad I joined a little early and was able to listen to what you said.
I'll just share here, just so people could see. This is Glenn, who Selwyn's referring to. So
yeah. So Glenn and I started to work together in 2004, I think it was, when we first traveled together. We were looking for opportunities. We had a relatively open mandate. The banking world was very different in those days, much less regulated and constrained than it became after the global financial crisis. And what I loved about the banking world is something that I've retained in private equity, and that I think speaks to your audience, Scott, speaks to the people who are here. And that is the sense that your risk is the risk that you see. Consulting is always 1 degree removed. You're telling people what to do, you're giving advice, and then you walk away. You leave your PowerPoint presentation on the desk, and you get back into your fancy car and drive away, and then go to the next client. With and particularly the RMB culture as it was in those days, you're very well aligned with the bank as your principal investor. And Glenn and I ran a principal investing business. And then later on went into funds and into property and into various other areas inside the bank, but always having that particular philosophy. So I think the journey for me is, having found that world, where you're very well aligned with the people that you work with the people who supply you with resources, with capital in particular. I always wanted to stay in that. And obviously I moved in banking and developed an expertise in property, but I've always liked the idea of being a generalist. And Glenn had developed a relationship with Garth, who you mentioned in your presentation as well, Scott. They were kind of social friends, and and Garth wanted to build the capability in Callio for Callio to do private equity in a I think a different way. Just to dwell on that for a moment. Private equity investments are often presented as investments into funds. And the traditional private equity managers, the famous private equity managers that are out there, Apollo, Cerberus, Blackstone, and so on, those managers manage giant funds. Glenn and I had both been investors in funds on behalf of R&B and had managed funds on behalf of R&B. And we didn't feel that that fully captured the idea of alignment that we wanted with our investors, the idea of a fund. And what we do in Callio Private Equity is direct private equity. That's our core business, it's direct private equity, which is individual transactions or individual investments matched to groups of investors for that investment. So, for example, investors who don't like a particular sector or who want to be more offshore or whatever it is, we can offer them investments that make more sense for their portfolio or for their levels of interest. The other thing that we realized would be very powerful is what you mentioned, Scott, which is the community side. Callio has a family office and a wealth management business. It has clients who, many of whom have been in business or are in business and have networks and links of their own. We don't really like the idea of networking in the sense of, attending cocktail parties and doing that kind of thing.
Just by the way, that's the biggest load of bullshit I've ever heard, where you walk around and hand out your business cards.
Yeah, hand out your business card.
It's literally like poor man thinking. Like, it doesn't work. Trust me.
It doesn't work. It doesn't. So the deepest due diligence that you can do on your partner is just knowing them, or knowing somebody who's been in business with them and seen them operate under different kinds of circumstances, and somebody who can vouch for their integrity. So many of the people that we invest in are people that are part of the broader Callio community or our own personal networks, in the sense of we know people who've worked with them, or we know people who've invested with them, and many of our opportunities come through that kind of channel. And I think that's very powerful.
By the way, sorry for butting in. I know people hate me doing it, but I'm just trying to give context to people. Remember to everyone who's listening, remember what I just said literally half an hour ago. What he's talking about is you test people's character not when it's working, it's when it's not working. And that's the power of knowing a relationship, because everyone tells you about all their wins, but they often don't tell you about their losses.
Yes. So for me, the best example is actually my own business, Callio Private Equity. So why is it that after working with Glenn in the early 2000s, mid 2000s, we went our separate ways just because of the way things evolved in R&B and the property businesses and so on, and then we joined together. Glenn and I lived through the global financial crisis together, and we were very, very heavily exposed in our portfolio to that. We managed a portfolio with assets of over $250 million, but it was exposed to the property sector. So it was the most heavily hit sector during that global financial crisis. But I could see how Glenn worked. I could see how I worked under those circumstances. And you can build a rapport, and you can now build that level of trust, which is so fundamental. And if I look at the investee CEOs that we work with, not all of them have the same level of capability, or to be completely blunt, the same level of integrity or alignment with us. But the point is that we try to find people who will have that alignment. And in situations where they're facing adversity, we'll do the right thing. And at least we'll think through the process with us aligned with them. So to give you an example, and I think Scott, in various other presentations, I think Glenn might have presented to a different audience, but Austin Business Finance, which trades as backed in Texas. Glenn and I were visiting that business last week. The CEO, through COVID period, said he would never stop paying interest to our investors. So we actually offered to him and said, we're pretty sure your business needs liquidity in a time like this. So we're happy to approach our investors and say, you're not going to be getting your interest payments. We felt that might be the right thing for the business. And he said, no, he didn't want to do that. He felt the correct thing was to maintain a 100% track record with us and with our investors, even if that meant making a personal sacrifice on his side. And he was able to trade through, and the business has grown and actually grew through the COVID period. Other competitors went out of business, had to be resuscitated or bailed out, but he was able to do this. And I think he took a risk, but the point was that he wanted to ensure both that he was aligned and that he communicated to us that he had that alignment with us. So I think, Scott, your various comments very pertinent. In our deal making, we try not to be the majority. We want to make sure that management and the people who are going to be required to deliver on the investment thesis.
I'm being rude, but I'm just coming back to this, like what I call old school mentality, new school mentality. Because old school is, and by the way, Glenn did an incredible presentation last week to our mastermind, was about private equity, and I'll show some of the slides. Again, people have access to get asset mastery should they want. But the point being is that the old school way of doing it in business or in property was to go and buy the whole thing, okay? And the first time I ever learned about this, ladies and gentlemen, was actually my father. So my father was the financial director of Rainbow Chickens, and he said that Rembrandt, that's one of the most wealthy families in the world, came in and bought 40% of the company. And now the old school mindset is, no, but I must own more than 50%. I must be in control of the company. And then a couple of years later, my friend works in England for a company called Strand, and they're a private equity firm, funny enough, as well. And they got bought out by a big family, and this family, the Hanson family, bought them for 40%. I thought, shit, there's a pattern there. The wealthiest families in the world are buying 40%. Why are they not buying 51%? Because we're all taught to go buy the whole thing and we must control it and whatever. And the point being is that that's an old school way of doing it, because if you control it, you have to manage it. And then, interestingly enough, literally last week, Glenn said, no, we're into conscious capital, and we'd much rather the founders and the owners and the team and, whatever, have the majority, because then they're going to get out of bed every morning and worry about it and getting it done versus you getting out of bed every morning and worrying about it. So I'm jumping in, Solomon, but I'm just trying to give context to my little picture that I drew here. Basically where we're going,
Yeah, that's exactly it. And then the other component is often leaving space for other key employees. So yes, the founder, manager, it's often also other people who are needed to be aligned and who need to have the same kind of orientation. So we're very keen, like in our contracting, we're very keen being on the remuneration committees of the companies that we invest in, both to avoid the conflict that you have with the CEO founders, but also to manage that next level, to say, who else is important here? Are they correctly incentivized? Are they locked in? Is there the correct protection for the company and the correct alignment for that employee? So to try to understand how value is being delivered, and knowing that as an investor, you are bringing a particular kind of value. You're bringing risk capital, but you're not bringing operational capabilities. You're not bringing market knowledge or anything like that necessarily directly. You sometimes can help. And I think we do help our investees. And we often intervene when they want us to intervene. And they'll say, can you help us with this? Can you talk to the bank for us? Can you sit on this call? We've got this issue with one of the other shareholders. Can you help us? We're always available to our investees to do those kinds of things, and to investee CEOs and founders. But we're fully aware we're not able to do what a CEO does day in and day out. We're not able to do what a management team does day in and day out. And we're deliberately if we could run, one of our investees, we would, rather than do our current job. But we actually believe that our founders should be the best at running their own businesses, both because they should be fully aligned, but also they should be developing their knowledge as they go, as they operate, and they should have entered with a particular understanding of their business, which obviously we test. Yeah. So to go back to your original question about personal journey, I think for somebody like me who feels that they're a generalist, wants to be involved in quite a few things, likes the interactions, which are, I think, meaningful interactions with partners. This is a very good job that I have. That I'm able to speak to CEOs about something that's very fundamental to them. In many cases, I'm able to help them, and our role in their lives is actually quite fundamental. And we do have investees, so I'm very thankful for the way we've approached things. And we've actually had people seek us out saying, I know I can get the money somewhere else. I could probably get a better deal somewhere else, but I'd actually rather have somebody who wants to relate to me when things are not going well, will understand that or help me intervene in a positive sense. So that's the conscious capital side, in terms of not just in terms of the final end goal investment, but also in terms of how we operate those investments and how we make those investments on day one.
Yeah. So let's go. I want to share my screen here quickly, and we're not going to regurgitate everything that Glenn went through. So Glenn did this session for our mastermind, and like I said to you, every month we go deep into one asset class. And Glenn, actually, funny enough, literally this month of October, did the private equity one. So again, you can get this as part of asset mastery. But what I just wanted to talk about a little bit was just the asset class of private equity, because some people confuse it in terms of what is it, etc. And in simple terms, it sometimes gets confused, but private equity is where you invest in a company, but it's a non-listed company, so it's a private company, and it can also be a property deal. And we're going to talk through some real opportunities now, so people can get a sense of it. But just from your perspective, Selwyn, how would you sum up private equity?
Yeah, I think you've already summed it up. So it's a massive asset class. Normally when they show private equity or the size of private equity, they're only talking about those things that show up in formal funds. But if you think about it, almost every business, any business that is not listed, is a private equity business in the sense of operating outside the public, outside the public listed markets. So it's a very wide range of potential investees. And it's our area in private equity is a little bit above venture capital, but certainly below what we would normally classify as buyouts or mergers and acquisitions. We invest in what we call growth. So it's the supply of capital to businesses that want to grow and for whom the best form of capital is equity capital and long-term permanent capital in some other form, potentially permanent debt even. So that's how I would classify our version of private equity.
Brilliant. And I think, again, I'm not going to go through all these slides, but going through this whole presentation, there was like, what are the different returns? How do you balance risk and return? There was talking about private equity in 2022 and where the opportunities were. Was talking about the Callio private equity team and taking to extend more around what Selwyn has already spoken about and what differentiates them. But what I wanted to do was actually to pivot, and I want to start talking about some using a deal as an example to kind of talk about kind of risk and partners, because I kind of want to get in. So as an example, this is an opportunity that is literally becoming available as we speak. It's one of the ones that you've done a lot of due diligence on, but let's not use this as an example, as a case study for kind of the type of thinking that you would go through in terms of risk and due diligence. So let's just say now I want to be in American property. I personally have been wanting to be in it since 2010. I've been wanting to get into Manhattan for my whole time, and I've never once been able to invest in New York, let alone Manhattan, because it just never found a way to be able to do it, never found a partner on the ground. And so talk us through, Selwyn, the process you and Glenn go through in ascertaining a market, finding the partner, doing the DD on a deal, and determining, yep, this one's good for our investors.
So this is actually a fantastic example, Scott. So one of the sponsors of the underlying transaction for this Catherine Street transaction in Manhattan is somebody called Duncan Randall. Duncan and I have known each other. We were for over 20 years. We were together in McKinsey, and we served on the same team and landed up living in the same house for several months, serving a particular client. Duncan is married to an American. He's lived in America for several years now, and he's built a property business using his own money and money from other investors. He had previously been a private equity operator in South Africa. He was one of the founders of Tana Africa, which is funded by the Oppenheimer family and a sovereign wealth fund from Singapore. So here is somebody that we know very well. Duncan knows that we have an investor base that is interested in these kinds of assets. He has shown me personally transactions. Before I joined Callio Capital, I invested with him myself. So I have a sense of how he's operated. I know how he's operated through difficult times like the COVID period and how he's been able to manage assets. He actually approached us and said, this is what's going to come available. I want to structure a deal which will allow your investors to invest into this debt. There are other people in his network that he's offering this to, and so we had we had a chance to review his due diligence, look at the documentation ourselves, ask various questions, understand the market studies, and so on. But the starting point was this was not something we sought out. We did not do a web search and say, well, deals available in Manhattan.
And by the way, if you do that, just quickly, sorry, if you do that, like you're buying the crap no one else in America wants. By the time it's on the web, no one else
exactly
wants
it. Yeah, so this is very much a private deal based on relationships that we have and that other people would simply not have access to. So I think this is one of those examples. Every single one of the deals that we have was sourced or has been sourced through somebody coming to us and saying, do you want to participate? Does this interest you? Is this something that your investor base is likely to go for? And then we can interrogate it and say yes or no. In this case, what was brought to us was a very much established transaction. A lot of the initial property work had been done to a very high standard. Duncan himself works with a team that has a lot of experience in this particular kind of property redevelopment. Historic buildings in Manhattan that are being redeveloped. There's a system where you get historic credits which allow you to benefit, to effectively do your developments at a cheaper rate because you're getting these tax credits. And so a lot of the work had already been done. It was a question of reviewing that and understanding that and getting a sense of the risk return. We already had a strong sense of the sponsor and the way that they would approach this. So yeah, so this particular transaction, what's been offered is senior debt secured by a long-term lease on a property that was formerly owned by the Catholic Church. It's in the process of being transferred from the Catholic Church to the development company. And the funding is senior funding, as I said. It's secured funding. It's 1% a month payable quarterly. So very good return. We've again, to Scott's principles, we've said we will only take a relatively small portion of it. We're probably going to take somewhere between 15 and 20% of the total debt that's available, so that other people can put their money in. There's a big group of investors, many of whom have invested before with Duncan and with the other sponsors in his team. And so that offers us a sense of comfort. Other people are reviewing the documentation. Other people have experience on this, and there's I think strong alignment with the total investment team.
A couple of things that I think are first you're saying. So firstly, there's power of community. Okay, so like it's not like me trying to do it all on my own. Like, oh my God, I'm going to do all my own due diligence, whatever. It's like there's a whole group of us, like looking at it and whatever, doing it. The second thing is that from a risk perspective, you're effectively taking out the bank. Like you're almost taking the position of the bank because you're putting the first mortgage debt down. So you're behaving like a bank. You're putting the money down. You've got first mortgage debt over the property. So should stuff go wrong, the property's there. It's exactly like when a bank lends you money against your house. And for the bank interest rate, you're getting paid 1% a month, paid quarterly, which basically means you're getting 12% a year in US dollars. Now, please tell me, and again, I've been doing this 28 years, 12% in Manhattan, New York, okay, for a 12-month project. It can be extended to 18 months, but it's still a short-term project, 12 to 18 months. If it gets extended to 18 months, by the way, you still get paid your 1% per month. So you're still getting 12% a year. I mean, that is a really, really good return. Now, you're not getting the capital growth. Remember, you're not playing in this part anymore, but that because you're taking away the risk. So this is an income-producing deal only, but it's a 12% in Manhattan, New York, and you basically have it secured against the property with a partner that's got extensive experience, So I just want to kind of give people a context of what we talk. And these are real life examples now. Like, I didn't want to, someone phoned me yesterday and we had a chat and we were like, you know, we can talk about private equity until the cows come home, or we can talk about actual deals, like, because then it's like literally people can learn from actual deals, you know. So that was the one. Now we're talking diversification. And so I tell you what, one was getting a little time machine and an airplane all at the same time. And we're just going to fly across the world, straight over to another continent, another currency, another partner, another asset class, by the way, because that one is effectively a debt deal. Yes, it's in property, but it's a debt deal in property. And now we're going to fly across the world to Germany, which, by the way, is the #1 economy in Europe. And we're going to look at a euro deal, and it's actually an equity deal in terms of that process. So if I come here, so let's do the same process now with this deal, because I'm trying to give people a concept of, from the comfort of their couch, they can get access to partners, they can get access to information, they can invest, and they don't have to get on an airplane.
Yes, they don't have to get in an airplane, and they don't have to visit small towns in Germany. So just to give some context on Germany and why the opportunity is a genuine diversifier, Scott, because, you know, United States, Manhattan, that is the center of the universe, at least according to New Yorkers, that, you know, and a lot of people, that would be the center of the universe. In Germany, a big chunk of the economy is run out of towns that you and I are unlikely to visit or be able to find on the map necessarily without some kind of help. So I mean, the examples are Volkswagen's based in a town called Wolfsburg. This particular town, Wuppertal, is home to a couple of industrial brands like Vorwerk and suppliers into the motor industry. It's not far from Düsseldorf, but it is a secondary town, but with a very strong industrial base. So just to give a sense, this kind of opportunity is fundamentally different and is a genuine diversifier. And in Callio, this would be the third deal that we've done with the same sponsor. The sponsor, interestingly, was also introduced indirectly to me through people that I knew, and several people that I know had invested with him previously, and very successfully. It's managed by somebody called Peter Katz. Peter used to run the Redefine portfolio in Europe. And he then went on his own and uses private money and has a very similar mindset to us, which is quite important. He also raises funding, does a kind of an equity raise for each individual investment, and does it. He wants to do it through people that he trusts and that he knows. So as I said, we've done, this is the third one we've done through Callio, but before that, I'd actually been exposed to several of his other transactions. And again, I'm used to his due diligence process. It's very rigorous. It involves technical elements, engineering studies of the buildings, for example, studies of existing leasing documentation, tax structuring, and so on. Those are extremely important in this kind of transaction. What's been offered here, though, and again, to Scott's point, is actually equity. So it is an equity exposure. It does have a reasonable yield. We expect a kind of mid to high single-digit yield initially. It has in-place debt, which is important. It has debt that was entered into and that will be assumed on transfer of the property when interest rates were still low and that were fixed at that time. So there's a massive benefit in that.
But just on that, sorry, so what's really important here, people always say to me, oh, but Scott, you know, if I buy a house, I'm getting a mortgage, so I'm getting leverage, and, you know, et cetera, et cetera. And what you're saying here is so important, because you are still getting leverage. The only difference is, even if you've got $100 million and you fly to Germany right now, the chances of you getting debt are zero, because you've got no relationships. And if you do get debt, you're going to get very expensive debt compared to partnering with a local person that's got a track record, got experience, has the debt in place, and like you said, has fixed it prior to the interest rates rising. So it sounds too good to be true, and it is if you're trying to do it on your own, unless you've got partners.
Yes. So these deals that these deals that we're talking about, Scott, are a little bit different from the deals that we normally do as a pure private equity house. Anyone who visits our website will see deals that we've done directly. These deals are deals that have been brought to us by people who are part of our community, and people that we've invested in personally, or who are people that have been invested in by like friends of ours and other members of the Callio community. And so these are a little bit different, but these are not possible to do from where we're sitting. And we have to rely on the individual partners and the networks that they've built. So for example, Peter has a whole team of people who do due diligence for him in Germany. He has a legal team that has worked with him on multiple transactions. He has an administrative team that is able to manage the investment structure for him. And those are things that if you and I were trying to build those from scratch or trying to do on our own, we simply would not be able to do without years of work and without having been in the market previously. And the benefit of somebody like Peter is he built up his infrastructure while working for Redefine and building their European portfolio years back. Then going on his own, he decided to focus on particular asset classes. He did a study. He said there's certain kinds of assets that seem to do well through the markets: health assets, diversified assets, basic necessities, properties that deal with basic necessities. And then the German market in particular has certain resilient features to it, including the availability of debt from multiple funders. Again, but Scott's point stands. It's not possible for us to arrive there, drive out to Wuppertal, and to start doing deals. These deals come along quite rarely. This is the first deal we've seen for over a year from Peter. Just hasn't felt that the other deals that he's seen are good enough for his investment, for his investors.
Yeah,
so that's just interesting.
To put in perspective, someone, the last deal you guys did with Peter, and you've done 3, so there's track record, yes. You've already said. But I remember there was a deal as COVID was happening, and one of your investors got spooked, and there was a gap for 700,000 euros. And I was like, pick me, I want to be in it. And we tried to go to our investor base, and we just couldn't move quick enough, because these things move quickly when it's a good deal. And again, I remember it being a DIY store.
Yes.
Anyway, and the long story short was, it was a great income return. It had good capital growth. And you guys exited that in 18 months or something and got a 1.8 multiple, which basically means if you put $100 in, you got $180 back, which is really good in less than 2 years. And it's, again, it was, for me, it was so frustrating. It was I was like, I want to be in the deal, but we just couldn't act fast enough, And one of the reasons we created the mastermind was that sometimes through the Wealth Migrate platform, it takes too long to get stuff set up and blah, blah, blah. And sometimes with the mastermind, it's guys, it's a good deal. We need to move quickly. Are you in? Are you out? And sometimes that's how private equity works. You've got to be able to act fairly quickly. So when this deal came along and you were like, same operator, same person, I was like, if you don't let us get in this deal, it's gonna be war. You know what I mean? So really, really appreciate it. Peter, let's go to the last one. So again, let's go back in our time machine now, back in our airplane, and we're going to fly right across the world back to Austin, Texas. And again, we're going to go into a different asset class now. It's still under the umbrella of private equity, but now you're actually investing in a company. And Peter's, I keep saying Peter now because you put Peter in my head. Someone's already mentioned this company backed. Just tell us a little bit about this, because these are literally 3 opportunities that we're looking to go live with you on, in the near future.
Yeah, so Scott, I want to stick with the theme that you raised, this partnership theme. So Backed is the trading name of a company called Austin Business Finance. Austin Business Finance is founded by a South African called Zaan Myburg. Zaan is also founder of Cashflow Capital, which is a business here in South Africa, and is a working capital lender, mostly to restaurants, franchisees, and so on. And he moved to America, and we, as in Callio, started financing him pretty much from the beginning, just feeling that he had a good concept, he was a good operator, and he had a model for dealing with a kind of risk managed model for introducing himself into the US market. So we've been invested since 2019, and we invested in equity and permanent debt. And now that's all been taken up, but the business is a lending business. It does what are called merchant cash advances and lines of credit to medium-sized and small corporates in America. That is a massive market. United States is obviously a very dynamic economy. There are hundreds of thousands, maybe millions of businesses that actually fall into scope for BACT. And it's mostly working capital lending of less than 18 months and relatively high interest rates because it's generally lightly secured or unsecured lending. And what's important is that over the years, we've been able to monitor the credit performance and we've been able to monitor the management performance. And Glenn and I were there last week, and we sat with the management team. We were able to see Zahn has built a business which now has 56 employees, 46 based in Austin, 10 based in California. He sources deals through brokers and through a direct team. He's got a refined technology system for reviewing deals, assessing the credit risk. And a very small percentage of deals that are referred ever get funded. But there's massive scope in a business like this. BACT was actually rated by Inc. It was rated as one of the top 1,000 fastest growing businesses in the United States, ranked in the top 200 last year. So it's viewed and seen as a successful high growth business. What's been offered is debt, again, at 10% per annum. It's a very different profile, very diversified. That's US dollar debt. That's money that goes into the business as subordinated debt and then is used to finance the operations of the business, mostly lending, mostly directly going into building the book of Austin Business Finance.
Awesome.
There is a senior lender. And this helps us as well because it's not just our due diligence. It's Fortress, one of the world's biggest lenders, is the senior lender to Austin Business Finance. And they have a line of $50 million expandable to $100 million.
It's amazing. And you also, you guys put your money where your mouth is. As I understand it,
yes.
Debt in your equity, you've got $20 million in the
yes, $20 million we have exposure to it.
So,
and I'm personally invested. Well, personally, it's actually my wife who's personally invested in this business. Glenn is personally invested in this business. So we definitely put our money where our mouth is, just generally. But with this opportunity in particular, it's been a very good investment for us. We've been able to see it grow from initiation, and we built a very strong rapport with the management team. Obviously, like any other business, it has its challenges and it has its risks and so on. But the risk return profile, I think, is massively compelling for a debt instrument. To get 10% per annum and to have an investment term of 3 years. Given where interest rates are likely to go, I think I just think that's very compelling.
Yep, no, completely. Just one thing we forgot to mention here. This building in Germany is, so just to remind everyone, this one is a 12% US dollar income return per year. This one is a 6 to 6.5% euro income return, again paid quarterly, with a total return including capital growth of somewhere between 13 and 15% in terms of that process. And then this is a debt deal at 10% in US dollars. So you've got euros, you've got dollars, you've got debt, you've got equity, just to kind of give you an idea of different types. Selwyn, as always, it's a pleasure to chat. I love what you've done today just with everyone and sharing with everyone. I'd love anyone to give comments in the chat box as to what you thought. What we've done very consciously today is we've taken away a lot of the theory and we've talked practical about actual partners and actual deals so that people can understand it. Because again, I can waffle about the theory till the cows come home. I've got an entire course on it, Wealth Going Global and Asset Mastery. You can go and do all of the research. But in my opinion, there's nothing more powerful than learning while doing. And what you've helped us do today very consciously is go through 3 deals and hopefully for everyone, literally learn while doing. And even if you're watching the recording and these deals are gone, because they will be gone. They're going in the next, one of them's closing in a month, the other one in a month, in 2 months. The point is, might be watching the recording, but it still gives you a concept of when deals come, how they work, particularly when we work with Calio.
Scott, thank you so much. I love the opportunity to speak about my business. I love the opportunity to speak my deals. And I'm also glad that I joined early to see what you said about partnerships, because that's so fundamental to the way we operate as well.
Yeah, no, well, look, it's I fundamentally believe it's the collaboration and partnerships is the currency of the 21st century, and that is built on trust. And the reason I say that is that, let's say that the currency of the 21st century is trust, but how do you achieve trust? Well, it's collaboration and partnerships. It's the only way. It's the only way to do it. If you try to do it all yourself, it's literally the old school way of doing it, and then you're going to be stuck probably in your country, in your asset class, in your town, in your currency, and because it's virtually impossible to go internationally without collaboration and partnerships and to truly diversify. But there's lots of brilliant comments coming through, Selwyn. Thank you so much for your time.
Thanks,
and have an awesome day, dude.
Bye. Thanks, everyone.
So what did you think? Now, you can see why I do this. I bring people in so that you can truly get to meet the partners. It's all good and well me teaching you, but it's better to actually, be able to learn directly from them. Just for the record, I did say for the VIP members and the wealth hackers, we basically got summary documents, cheat sheets on everything they spoke about. So the key takeaways, the action points, the full summary, the different deals, the structure, and everything else. So just for those that are, if you're still not sure and you haven't made up your mind yet, then don't really know what else we can do to make life easy for you. Okay, so the other partners that are going to be in the resources, we've got 16 different partners that you can get access to, in 17 actually in the asset class mastery. But Judd Dudding, he does industrial commercial property. We've got deals live on the platform. Sorry, just before I go to Judd, something I wanted to share with you on the platform here was that if I go back to Wealth Migrate here, if you want to invest with Selwyn and where he's done the due diligence, you can see Calio Private Equity. So the Manhattan deal that's live right now, by the way, it's closing in it's first come, first serve. It's closing in the month of June. We're just not sure when, but we've got this Manhattan deal. You've got 3 options in Manhattan, plus you've got the KFRED Private Equity deal, which is Calio, and you've got the back deal. So that's all of those, the due diligence has been done by Selwyn. Then Judd, the gentleman that I just mentioned here, he actually is the partner behind this deal here, which is in Phoenix. Now, Phoenix is one of the top 3 markets in America. There's $8 trillion of investment coming into America. Industrial logistics, it's where it's all happening. So this is an opportunity that you've got there. And then Bruce Saunders is someone that we've done over $100 million worth of investment with. He's an ex-South African. He moved to Atlanta in 1997 and is a really amazing guy. He's a chartered accountant as well. And he just talks about the market and everything else. He actually started a business about 2 years ago now, and they've got 17,500 units under management. I mean, it's phenomenal. How big the scope is of America. So as we finish off, the definition of insanity is to do the same thing over and over again and expect different results. So again, you might have been doing it one way, you might have been kind of stressing or dabbling and trying to do it all yourself. But hopefully now you've learned from people like Selwyn, myself, Gary, Anthony, and others, how you can actually do this through partnership and make your life so much easier in terms of the process. I do like to ask this question, and I always kind of want to reiterate to people that, you can feel overwhelmed. This can feel like you're drinking from a hose. And that is one of the reasons why I'm always trying to synthesize it and make it easy and say, imagine if you took away that 40-minute interview and you literally had it summed up in 2 pages. That's why we're doing this consistently, always trying to make it simple so that you can really get to the point. I also remind you of the little game we played today about the doctor. And if the doctor said, literally you've got a serious medical condition, you need to lose 10 to 15 kilos, you need to do it as quickly as possible, and you've got 2 options. You can go do the home study course, or you could have the coach. And I've shown you that the way to success is to get the right partners. Literally, Selwyn reiterated that. Getting access to the deals. He shared with you how you can get access to the deals. He showed you how you can get the right information. And also by literally going through all the different options, there's the ability to diversify. So again, if you want to do the home study course, it's available. You've literally got the right partners. You've got asset class mastery. Access to the deals, you've got Wealth Migrate. The right information, you've got Wealth Going Global. And diversification, again, you've got Wealth Migrate. So you've really got the options, because at a mastermind level, there's literally the 9 steps, and you can follow it. You can have it literally done for you. And so Jane, if you said it's like a fire hydrant, I agree with you. It's a lot of information. I'm trying to share with you 28 years worth of knowledge. And the thing is, you can try and absorb it all yourself, and you can try to think to yourself, I'm going to do it all myself. Or you could literally come and join the mastermind, and you can have someone hold your hand, and you could partner with Selwyn and Anthony and Gary and Scott, and we can hold your hand and take you through this process. And that's why I think that people have 3 choices. And the reason I say they got 3 choices is you can keep doing what you've always done, and you can expect different results. Okay, so you can keep trying to do it all on your own, and you can expect different results. You can join someone like the Wealth Hackers, and you can get access to the home study courses, and you can go and learn in a digital like-minded community. Or you can literally join the mastermind and have someone hold your hand. And the question I would have for people is, would you invest 12K? So would you invest 12K in yourself if all it did was help you achieve your freedom goal? Would it be worth it to you? So do me a favor, type in the chat box. Would you invest 12K in yourself if it helped you achieve your freedom goal? Yes or no? Would it be worth it to you? What about if all it did was help you protect your wealth? You've worked really hard all your life, you've made your money, and you want to protect it. Would you pay 12K to have someone like a family office come and help you structure it, tax structuring, and to protect your wealth? Would it be worth it? Would it be worth 12K to you? What about if all it did was save you time? Time is so valuable to you, and it saves you a decade of your time. I mean, again, you can figure this stuff all out. You can fly to Germany, you can fly to Manhattan, you can try to figure out how to invest in America. You can literally do it all yourself. Or what about if you paid 12K to literally, save yourself a decade, maybe even more? What about if all it did was provide you with a globally diversified passive income, and ultimately with peace of mind? How valuable is peace of mind? You don't worry about Trump and tariffs and what's happening in the market and, what's going on in Germany, or what's going on in America, or crisis, do I need to know what's happening in England, or inflation's going up, or interest rates are going up? Like, worry. You actually know that you've got the partners that can give you the peace of mind. Would it be worth it to you? Would it be worth a 12K investment to you? I know certainly for me, it has been. And for over 100 other families that are part of our mastermind, it has been. And I hope for you that you would truly see the value. And one of the things that I learned a long time ago is that when something is truly valuable to you, price is inconsequential. Like, again, I've told you all along, you find a way to do what is important to you. You get what you want. So, I remind you of the story of Michael. We started on Monday with Michael, and, it's so interesting because he now lives in England. He's achieved what he wanted. His daughters studied there. His daughters live there. He's a global citizen. He's got that freedom that he wanted. He's got his plan B, peace of mind. He's even immigrated. And he always says, when I joined, it was the best money I ever spent, and it would never have happened if I tried to do it myself. Now, the challenge we got at the mastermind is that it's a bespoke solution. And I work with you, one-to-one. The family office works with you one-to-one. When you do your profiling test with Enneagram and Wealth, they work with you one-to-one. And so we can only offer it to 5 people. So what we do is people sit down, and they sit down with Alex, and we understand what it is you're looking for. And really, we're just trying to understand. We want to understand kind of where are you, where do you want to be, and we want to see if we can help you get from A to B. We also want to explain in more detail what the mastermind's about, how it works. I know some people yesterday were asking about the costs, etc. The point is, that's the whole purpose of setting up the application. And then what Alex is doing is he's looking, who are the right type of people? Are they, can we help them? Is there an alignment? Is there fit? And the only challenge that he has is sometimes we have to put people on the waiting list, because the agreement that we have with the Calio team, the family office team, is that we can only onboard 5 people at a time. So that's a constraint. It's not a scalable system. It's a bespoke human one-to-one system that we work with people. So it is a constraint in terms of what's happening. And for me, in terms of the real people, real stories, you've seen people all the way through this process. And if you want to really go and watch loads and loads of videos, my strong recommendation is you literally go here, you go to Classroom, and you go to Success Stories. And I don't know how many videos you want, but you can go and watch all the different videos, even the long interview videos, all the testimonials from the Wealth Weekend and everything in between. Okay, so that's what it means to have a coach in your corner. And I love this little slide, your comfort zone and where magic begins and where it happens. And it's all about getting out of your comfort zone. And that's what the mastermind is. I think you might have picked up my energy, whether it's the carrot or the stick. What I love is helping people get out of their comfort zone and make magic in terms of that process. So that's why we created it. It's been going 2.5 years. We've got over 100 families now from all over the world. An amazing group of people. It's the thing that I'm probably the most proud of in terms of what we've created in business. And I'm super, super grateful to be part of it. Let's go to the action steps for today. Identify one specific risk in your current investments and outline how diversification can mitigate it. Name 3 things which you can do to find the right partners and the right information. Consider literally the passive income challenge if you just want to get started. The wealth hackers, if you want to be part of a like-minded community and get access to all the home study courses, and the mastermind if you want it done for you. Like literally done for you, done with you, holding your hand in a one-to-one environment. And then lastly, as always, share one key takeaway with your friends, your community that's here. It's very, very important, that you put down what your takeaways are. Your gold, watch Joe Dunning and also watch Bruce Sanders. So 2 incredible interviews that will help you with regards to that process. That is the formula. You all know it. If you want to come along to the Wealth Hackers, I do remind you that you've got the discount, the 20% discount, and you also, and it will only be for this week, you will have the ability to get access to Wealth Going Global when I do it live again. So the version that I'm going to do live again starting in July through that process. This is the value ladder. It starts off with the passive income challenge. Then you've got Wealth Going Global, which is the right information. You've got asset mastery, which is the right partners. And then you've got the mastermind, which is the family office. And the Wealth Hackers helps you climb up that aspirational ladder. That's our game plan. If you want to go fast, go alone. If you want to go far, go together. It's the African proverb. To those of you that are in the Q&A, come and join us. It's probably not too late, particularly if you want access to the workbook and also all the little cheat sheets that we're making. So it was actually Kelly's idea. I love it. She was like, why don't you create cheat sheets for all the key interviews so that people can walk away? And I agree with her. It's a brilliant idea. So I'm in the process of making them, and I will make sure that they're available. So if you want access to the recordings and all the cheat sheets, then make sure you join our VIP. As always, make sure that you're part of the WhatsApp group so we can let you know what's going on. You know the university, it's literally free. So go and partake and take advantage of it. Book a discovery call if you want. If you're not sure what to do, then book a discovery call and the team can help you. I remind you of the framework. There's 4 elements to passive income and freedom. You've got to have the right partners, which is what today was all about. You've got to have access to the right deals. You've got to have the right information, and you've got to have diversification. And if you want to do it yourself, we've given it all to you. You've got the right partners with asset class mastery. You've got access to the deals with Wealth Migrate. You've got the right information with Wealth Going Global, and you've got the diversification. The plan for tomorrow is to bring it all together. What is the point of all this theory if you don't bring it together and if you don't walk away with a plan? I made a commitment to you on Monday morning that tomorrow, by the time you would finish tomorrow, you would walk away with this being filled in. You would have a full plan. And that is my commitment to you. And so it's about leaving with a wealth plan. You'll get access to our freedom calculator. And I truly don't understand the point of all the theory if you don't turn it into practice. So by the time you leave tomorrow, we will leave with practice and with your plan in place. And let's finish off for today. Money won't create success. The freedom to make it will. Thank you so much for your time. I really, really appreciate it. Hopefully today you've understood the 3 most important things that I've been trying to share with you. The first is that when it comes down to risk and managing risk, the single most important component to managing risk is your partners. And I gave you the 4 golden rules that I've used through my own mistakes to come up with how you find your right partners. Can you remember them? Firstly, they've got to be in a business for more than 10 years. Secondly, they've got to have specific market knowledge. Thirdly, they've got to have put their own money into the deal on the same terms as you. And fourthly, there needs to be more than 80% of the money coming from local investors. Then the next thing I showed you was I went into my mistakes and why it is so important to understand the difference between the old school methodology of control, the red, and the new school methodology of partnership and diversification, the green. And it's truly, truly important that you understand that, because that is the philosophy upon which we operate. And if it's, if it aligns with you, then come on the journey with us. I would strongly recommend that you come on that journey. And the third thing was introducing you to Selwyn and basically how they operate when you're dealing with billions of dollars, when you deal with the institutional capital, and interestingly enough, how they find their partners and how they do their due diligence and everything in between. I hope you enjoyed it. I look forward to seeing you tomorrow. To the VIPs, I'll jump in the room now. We're going to discuss in more detail that old school methodology and that new age methodology, because I cannot overemphasize how important that is when it comes to investing. Thanks, everyone. See you tomorrow. Cheers, cheers.